All right. Hello, everybody. Welcome back to another episode of the Sunday Market Futures. And futures, if you haven't seen already, are indeed red. So we do have a little bit of red action going on. We'll talk about why they're red and kind of why that's happening right now. The main reason, obviously, being because of Moody's, where we got that headline on Friday on the market close. There's the futures right there, basically down about 1% across the entire market. But besides that, we don't have a ton of stuff going on that's affecting the equity markets. We have a bunch of headlines that we'll talk about today. We did have Bessent that went live today and gave us a little bit more clarity on what he thinks about Moody's, the credit downgrade. I did a bunch of research this weekend over Moody's, so happy to share that with everybody to further understand what's going on there. And then you do have Bitcoin that's having some fun right now. And I think there's some exciting theories for why Bitcoin is acting the way it's acting. 105.9 right now, above 106 at one point, I think, 20 minutes ago. Yeah, we just got just above that 106 range at 106.1. And so now we're at 105.9. So not too bad. Got a lot of stats to look at, a lot of charts to look at. We're going to get ready for the, I believe, 8th trading week of the year. Thank everybody for being here. I hope everyone had a great weekend. The interesting thing about this week that's coming up is that it was a historic last week based on everything that happened with Saudi Arabia and the United States and Trump getting into Saudi Arabia and getting a bunch of deals done, which, by the way, I kind of started binging a lot of Saudi Arabia content over the weekend, and I learned a lot more about how rich the Saudi family actually is. Like, we talk about Jeff Bezos, we talk about Elon. The Saudis, bro. I think the net worth is 1.4 trillion. So, yeah, Elon and Bezos they're rich, but they're not rich. And so I just started digging deeper into why the Saudis, why the Qataris, why the UAE is investing so much in the United States. And I think there's some interesting things that I discovered. But that week led NVIDIA to get to 136, led Palantir to get to 130, led the Qs to recover 25% from the lows in April. So it was a hell of a week for the market. And then on Friday, after hours, as you can see NVIDIA right there, down about 2%. It's going to open up in 11 minutes, and we'll see what the overnight markets look like. It fell from like 137 to or 135 to 132. Palantir fell all the way to 125. Robinhood went well below 60. I mean, all this stuff happened after hours based on that Moody's downgrade. Even Tesla closed at almost 349, then after hours at 340. So if you did have covered calls, a lot of times covered calls are based on the closing price at 8 p.m. at market close on a Friday, not the 4 p.m. price. There were some people that tweeted that they had $60 hood calls that ended up not getting called away because hood closed under 60. So it continues to be a covered call market, in my opinion. But after the opening overnight bell at 8 p.m., we will talk about the theories I have around Moody's, what Bessent said, and ultimately if it's a big deal or not. In my opinion, it really does not matter at all. Like, I think this is like the easiest buy the dip if we do get a dip, but I'll expand more on that once we get through these opening quotes on stocks. And then we'll keep going from there. I think everything will be down about 0.5% to 1%. So I wouldn't be too surprised if we're down about 1% to 0.5% across all these names, primarily because the futures, let's see if they're still down about 1%. I think they recovered just a little bit, but that'll probably implicate all these stock prices. Yeah, down about 0.5%. So instead of being down 1%, they're down 0.5%. Likely going to be the same thing that we see across equities. And again, I think it will be a simple buy the dip, and we'll talk about why I think that is the case. Are you doing the NVIDIA keynote tonight? I am not. Jensen is speaking at 11 p.m. Eastern, 11 a.m. Taiwan time. I was thinking of streaming it, but I also need to sleep and like get ready for the week. So I'd rather not stream this. We will cover it with Jose tomorrow. I think Jose is going to be streaming it if you want to check out his channel, but he'll be on the show tomorrow in the market open, and we'll recap what he has to say. I don't think he's going to say anything too crazy in Taiwan. I'm pretty sure he's just going to keep talking about the AI revolution and how exciting it is to invest in the future and the opportunities for data centers scaling, the notion of why Blackwell, Hopper, Rubin are kind of combining to be a trifecta of demand that is rather unlimited. I mean, we do have a stat that is pretty bullish on NVIDIA that I'll share in a second as well, but I don't think he's going to say anything that new. Maybe he might talk about humanoids and robotics and stuff like that, but I don't think it's going to be a keynote where, we're going to get some unique alpha from Jensen. But we will talk about it tomorrow, and we'll keep going from there. Why is everyone saying it's my birthday? It is not my birthday, but thank you everybody for being here. I know it's a meme to say it's my birthday every day, but you guys are it's like every other comment, happy birthday. It's not my birthday. My birthday's in October, but I appreciate all the pre-happy birthday wishes. Pulse77, thank you for becoming a channel member. Appreciate it. RF Andy, thank you for the $2 super chat. Shout out Aunt Sam. Shout out to Aunt Sam. And Silly Bunt, thank you for becoming a channel member. You've been a channel member for a while. The futures will recover quickly. Yeah, I mean, I would not be surprised to see the futures recover relatively quickly, to be honest. I think this is a stupid dip. And again, after we get through the opening quotes, I'll talk about all my reasoning behind it. I just want to get through what the futures look like when they're, what the overnight markets look like when they open. But, you know, you do a basic research on, if you've done any basic research on Moody's, it's like, it's not something to worry about. It's not something that it's like not even in the stratosphere of what I felt during April 8th when we had all that tariff stuff. Like this is like an absolute nothing burger. And if it creates a 5% dip across the board, I think a lot of people will be excited to buy that dip. Okay, so let me get this out of the way. The Terminator. I did watch it over the weekend. I see like 50 comments right here asking about the Terminator. I did indeed watch it. Apparently, my post of watching it mattered more to people than me watching it. I don't know why, because all I did was post that I'm watching it. This was the post on X for those that haven't seen it. It's not that crazy. I don't know why people were freaking out about my setup. It's just the TV, but for some reason, people had their qualms and issues with how I watched the movie. Look, here are my thoughts on the Terminator. I didn't fundamentally enjoy it because it was from 1984, and the effects from 1984 just didn't look that good today, right? Like we're in the new world of AI and CGI and all this stuff. So like to me, you know, it wasn't the most It wasn't the most enjoyable time to watch something with effects that look like it's from like 1934. Might as well be, right? So if you know, you were in the 80s or 90s, it was a big deal. It's just 2025, not that big of a deal. So that was the first thing. Number two, the romance between Sarah and Kyle was really good for the plot. I wrote down some notes right here. So I thought that was also something that was interesting. The time travel thing, I didn't, like, it took me a while to understand the dude is time traveling. I didn't get that either. But like, I got that towards like, I would say like 30 minutes. I was like, oh, it's like a time traveling thing that's going on right here. So that part I thought was interesting. The opening scene was rather, I guess, hilarious. I didn't expect to see ass cheeks, you know, in the first 30 seconds of it. But I guess that's how the 1984, you know, timeline was rolling. And then overall, you know, the time travel narrative, along with the romance between Sarah and Kyle, along with the effects that, even though they weren't as amazing as the effects that we see today in action films, I thought it was relatively interesting. It did give me that kind of, you know, that goosebump of, hey, you know, the humanoid investments that I have, Tesla, Optimus, will they actually one day turn on us? And I think there's a very good chance that could happen, to be honest, because why wouldn't robots that achieve artificial general intelligence, kind of that whole concept of the singularity, come to the conclusion that they don't want to be slaves essentially to human beings? Like, I feel like that logically could happen. But the actual movie itself was cool. It just wasn't like, oh my God, I want to watch it again. You know, like Back to the Future, I would watch it again. I genuinely enjoyed Back to the Future after I watched it. And, you know, the story behind that is I asked Vlad in the podcast, hey, what's your favorite movie? He said Back to the Future. And I was nodding it on. I was like, oh, wow, great movie. And I just was lying my ass up. I did not. But like 2 weeks later, I watched Back to the Future and I enjoyed it. I really liked the movie. So, and I enjoyed Back to the Future too. I haven't seen the third one, but I would watch those again. I wouldn't watch Terminator again. I really wouldn't. Now, I know a lot of you guys are saying T2 is better. I get it. Maybe I'll take a chance on T2, but I didn't like love the Terminator. But I'm happy I got it out of the way. You guys can't make fun of me anymore for not watching it. I'll be back. That scene was epic. Maybe I should end every stream like I'll be back. I should end it like, wow, Bitcoin 106.4. She's moving. Do we see 107, dude? We haven't seen 106 since January 29th. And I know that because we hit 109 that day and we haven't been there ever since. So look at Bitcoin. That, you know, although futures are down, Robinhood might open green because Bitcoin's going up. Coinbase, MicroStrategy, those guys might open green. We know Michael Saylor is going to be buying more Bitcoin based on what he tweeted earlier today. So we'll see that. But yeah, all of you guys are saying you have to watch T2. I guess maybe we'll have to put that on the docket because pretty much everyone outside of people freaking out about my TV setup, which I still don't get why people are freaking out about this. Everyone said you have to watch T2 over T1. So maybe we will do that. And yeah, we will keep the movie catalog growing over the coming months. Hope you're having a great day. Thank you for the gifted channel membership. That is a great username. Hope you're having a great day. I am having a great day. Hopefully everyone had a great weekend, got some time to enjoy, spend some time with the family, relax. I did a lot of walking this weekend, dude. Saturday, I walked the whole day. Went to like 3 or 4 different parks. I went to a park today. I was on the phone with Steve, which might join us later today. Steve might be free to join us, I think, at around like 8:30. So I'll let you guys know if he still can. But I was at the park, and you know, I was on the swing set. And Steve was like, "What are you doing?" I was like, "I'm at the park." He's like, "What are you doing at the park?" I was like, "I'm on the swing set." And the amount of freaking backlash I got from him for being on a swing set, no one should deserve that backlash, dude. No one should. He was like, "Why the fuck are you at a swing set? What do you?" I'm like, "I'm swinging and I'm talking to you. Like, what's the big deal?" He's like, "Why aren't you like playing golf?" I'm like, "Because golf is boring. Swinging is fun." Like, I think every person, regardless of their age, can find some peace and serenity in being on a swing set. It's not that big of a deal. But he couldn't rationalize it. I really do enjoy being on a swing set, dude. Like, I just put on my headphones, get on the swings. I just like, it helps me think about life, helps me make investment decisions. Like, I really do recommend people do that, but apparently I'm the only one who does it. So he was mad at me for that, but he should be on later today as well. Rob, thank you for the $20 super chat. Amit, do you think my Pouncer covered calls at 165 expiring on June 20th are safe? Yes, I think so. I think Pouncer getting to 165 would be a bit aggressive by June 20th. I think you'll be okay. And if they do, you can always roll that. Again, when you're rolling a contract that is so far out of the money because it becomes in the money, the stock has to go even further out of the money in order for you to be underwater. So if it gets to 165 and it stays at 165 or 70, you can easily roll out of it and navigate the situation. So I wouldn't be that stressed about that much of an issue. Spencer, thank you for the $2 super chat. When Terminator 2? Again, a lot of people have been saying to watch Terminator 2. And I haven't done it. The other movie that I watched? Besides Terminator 2 over the weekend? I finished the trilogy, folks. So I watched Terminator 1. I got that out of the way. I tried to watch Limitless. That was boring. I'm sorry. Limitless was boring. I couldn't get through Limitless. But I finished the trilogy of High School Musical. I finished High School Musical 3. So I was proud of myself. 2008. High School Musical 3 came out. Mortgage-backed securities were defaulting. Apparently, all these little kids were dancing and singing around, talking about how great high school is. Well, I finally got to finish High School Musical 3 16 years later, and I'm proud of myself. I really, really am proud of myself. It was a great film, great trilogy, and very great success to the Disney High School Musical 3 franchise. All right, here we go. Overnight markets are open. Let's see what we've got going on. Tessie is down 2.28%, 342. On Tesla. Robinhood is down 4.47% is what it's looking like right now. $59 on hoodie. So Bitcoin's not really. Oh, no, right there it goes. 60. There she goes. You saw that? There you go. Robinhood at 60. So Bitcoin probably helping Robinhood here right now. Palantir 126. Let me see. Let me pull up Webull, because again, the overnight market percentages are looking a bit weird here. But let's pull this up right here. So S&P is down 0.5%. We expected that. SoFi, wow, down 4%, 3%, 3.02%. Q's down 0.63. Bitcoin 106.3. Where is Hoodie? Hoodie, I think, is at 60. 60.88. That's down about 1.42%. So it was down more. Oh, that's why it's saying negative. Because after hours, technically it should say it's positive, because after hours closed at 58.90, but it's saying it's negative from where it was on the Friday 4 p.m. close. That is a little weird. Even Webull is showing that data the wrong way. But regardless, that's like technically green. Overnight is at 60.64. It's saying it's down 1.81% from 61.76, but it's up from 58.90. So that's a little weird right there. Tesla is green again. So overnight might say it's red, but after hours Tesla closed at 340. Right now it's at 342. That's green. That's not red. But it's looking at the actual 4 p.m. price, not the 8 p.m. price. S&P is down 0.5%. That's actually down. Qs are down a little bit as well. SoFi is down again about 4%. Palantir was at 129 at the close. Then it closed at 125. Right now it's at 126. So again, it says down 2.7%, but technically it's up a little bit from that 125.60. So we do have stocks that are not recovering, but like they are slightly up from where they were at the 8 p.m. close, even if the overnight markets are showing them as red. Bitcoin right here, 106. Where is MSTR? MSTR, there you go. MSTR is actually green overnight, 410. That's up 2.6%. It is hard to keep MSTR down if Bitcoin is pumping the way that it's pumping currently right now. What else do we have right here? Target's down a little bit after hours. Uber's down a little bit. Pretty much all the tech stocks are down. Grab doesn't trade after hours. CoreWeave was up 22%. I don't think they trade after hours, but they did end down 3% on Friday. UNH should be up. Dude, the CEO bought $25 million worth of stock. Yeah, there you go. UNH 294. Why wouldn't it be? When the CEO buys 25 million of your stock, I mean, come on, bro. 25 million of your, like, how it's going to be hard to not get the market excited about that. MicroStrategy right here up 2.7. So whoever bought the United Health dip, congrats. I didn't buy the dip. If you bought the dip anywhere below, I would say 275, you got a really good deal. Below 280, not a bad deal. And then obviously below 250, 265-ish, you got a pretty incredible deal right here. United Health looks like it wants to get back to 300 as long as no bad headlines get in the way. 294 on United Healthcare. Nebis, this stock is down 3.54%, 36 bucks. Down with the rest of the market. SoFi down 3.74. Where is Roblox? Roblox is down about 3%. PayPal is down about 0.82%. Amazon, Meta, and Google. Let's take a look at those. So Amazon, that's down 1.2, 203. Google, which has the I/O event on May 20th, that's down 0.79, 164. That's basically flat. And then Meta is down 1.17. Meta had a crappy week because they delayed one of their models. So that's why Meta is down for the week. Apple 209, down about 1%. And then Tessie, again, Tesla's at 341. It closed at 340 at 4 p.m., but it closed at 8 p.m. It closed at 349 at 4 p.m. on Friday. So still down from that 4 p.m. close, but above the 8 p.m. close, which is what we're seeing right now. So everything's down. Everything's down, but that's normal. That's normal. And I'll talk about why that's normal and why it's not that big of a deal. HIMS right here down about 3.64%. So I could not do the HIMS House podcast today because one of their co-founders had some technical difficulties. And so that one's going to be rescheduled for, I think Tuesday night, 9 p.m. So it should be out this week, but was not able to do it today. Where is Bitcoin? All right, so Bitcoin's at 106.6. Remember, all-time highs on Bitcoin is 109, if I'm not wrong. I'm pretty sure. Yeah, 109.455. 109,455.46. We are still about 2% away from that. It could happen, but right now we are still a bit below that. 106.6, though, is not bad. We hit 106.7 just 5 seconds ago. And it's not bad to see Bitcoin getting some momentum. I have some theories on Bitcoin as well that we'll talk about in a bit. And we'll get into why Bitcoin is going green. Tempest is down about 4%. Hertz is down about 2.4%. Nike is down about 1.35%. AMD is down 1.68 with all the semis. So you got AMD and the semis going down. MicroStrategy again, 415. That one is very green, 3.5%. A lot of you guys are still talking about Terminator 2. It looks like I'll have to watch that, given everyone saying that's the best one. Tesla down about 2.1, Apple 1.05, Hoodie, are we below 60? We are 60.45. Not bad. It was at 58.90 on Friday. And then Palantir, we were at 125. We're at 126.70, which is not too bad. Grab doesn't trade overnight. I did watch Matrix 1, and I tried watching Matrix 2, and I got bored. But Matrix 1 was legit. It was a good movie. It's just the sequencing of the other movies was not that interesting to me. The first one was not bad. Okay, cool. So these are the overnight prices. Let's get into what's happening, why it's happening, kind of why we're seeing the momentum that we're seeing to the downside right here. And more specifically, let's talk about Moody's, because Moody's kind of messed up everyone's mood on Friday. It was a good Friday, dude. And then after hours, I was live when Steve and Matt, and then boom, we get this Moody's downgrade, and like everything just collapses overnight. Anyway, I mean, I think collapse, 3 to 4% down, but it kind of took away Friday's gains. NVIDIA 134 overnight, actually. Not too bad. NVIDIA's kind of holding up. Let me check the actual futures. We were down 0.5%. Now, so futures are getting worse. We're down 0.74, which is more than half. But overnight markets aren't as bad as they were at 8 p.m. on Friday. I know it's like really weird comparing these time frames. Usually it doesn't happen like that, but the Moody's thing was so random. I think it messed up everything in the after hours markets on Friday, which tend to be relatively stable because it's a Friday, right? Like no one's trading on a Friday, but then this Moody's thing comes out and it kind of wrecked everything. But NVIDIA right here, 133.90, almost touching 134. Okay, cool. So let's talk about Moody's. First of all, what is Moody's? Let's get into that. Moody's is a credit rating agency in the United States. And essentially the goal of Moody's is to help bond market investors kind of figure out why they're paying what they're paying for bonds. And when they look at the international bond market, if you're a bond investor and you want to say, hey, do I want to buy Japanese debt? Do I want to buy the United States debt? Do I want to buy Australians debt? What debt is the best debt to buy? So what Moody's did for the first time since 2011, which is why people are kind of freaking out about it, is they downgraded the U.S. credit rating from AAA to AA1. And as a result, that got the market to be pretty damn upset about what was going on, right? Because essentially they're saying, hey, you probably shouldn't buy U.S. debt. Now, they didn't give you a suggestion on what type of debt you should buy, but their argument right here is that U.S. debt is not as good as it was before. And what that did to the 10-year is it spiked it up immediately after hours, which wasn't good because it actually made some progress, and now it's back up right here. We did make some progress during the day on Friday. Now we're back at 4.479, basically at 4.5%, which is obviously, not the thing that the credit market wants to see. But that is also a byproduct of what happened with the Moody's downgrade. So the question becomes, does this matter? The question becomes, is Moody's something that the market is going to care about? And sort of the broader question here is, why did Moody's do this? Which I think is the more interesting question than everything else, is like, why did we get this type of downgrade in the way that we got it? And is there any logic to this downgrade that is going to meaningfully affect the way we should think about equity prices for the further trajectory of, I guess, this year, right? Like, how bad are we really going to see the market think of the concept of Moody's? And based on some of the research I did this weekend that I want to show you guys right here, I really do think this is a nothing burger. This seems like one of the most obvious nothing burgers that we've had in a while. The tariff stuff was more of a something burger, right? Because you had real impacts of deals that were going to be affected by what would happen if we had these reciprocal tariffs across the world. Whereas Moody's, it just feels way different. And the reason it feels way different is if you look at how Moody's has historically rated the United States, it doesn't feel that like it's as aggressive as it was back in 2011. By the way, Bitcoin, did we just hit 107? I think we did 106.83. Do I have 107 on Webull? Oh, yeah, we did 107.1. Wow, dude. Holy crap. Fell right below 107 after that 106. But we did get there. We did get there. So there you go. There's Bitcoin at that 107 level. Okay, so let's just do a little bit of deep dive on Moody's, because it also will implicate what we've got going on in Bitcoin. Okay, so first of all, should the Moody's thing matter? No. The reason for that is because in 2008, as someone points out right here, Ray, Moody's said mortgage-backed securities were AAA rated, meaning you could definitely buy mortgage-backed securities because, hey, there's a AAA rating. We saw what happened in 2008. Obviously, mortgage-backed securities went under. It caused a massive economic crisis, the worst crisis since the Great Depression. And it was something where if you believed in the credit rating agencies at the time, that was not something that was necessarily going to be positive for people when it came to understanding what was going on with Moody's. Second of all, I agree with our Secretary of Treasury, Scott Bessent, that this is a lagging indicator. Here's what he had to say today on Meet the Press about Moody's.
I think that Moody's is a lagging indicator. I think that's what everyone thinks of credit agencies. Larry Summers and I don't agree on everything, but he said that when they downgraded the U.S. in 2011. So it's a lagging indicator. And just like Sean Duffy said with our air traffic control system, we didn't get here in the past 100 days. It's the Biden administration and the spending that we have seen over the past 4 years. We inherited 6.7% deficit to GDP, the highest when we weren't in a recession, not in a war, and we are determined to bring the spending down and grow the economy.
Now, here's what he also had to say about the investments that the United States got, irrespective of Moody's.
And if we go back to your initial question on the Moody's downgrades, who cares? Qatar doesn't, Saudi doesn't, UAE doesn't. They're all pushing money in. They've made 10-year investment plans. So this administration, we're doing peace deals, trade deals, and tax deals. And if we go
basically saying, hey, look, no one cares about Moody. They're a lagging indicator. They were wrong in 2011 because last time I checked, when they downgraded the U.S. in 2011, the U.S. has done pretty well since 2011. Our debt has been even though it's increasing our deficit, people have been buying our debt. It's not like there's not a bid on our debt. And our stock market has been phenomenal since 2011. I mean, it's if you have invested anywhere else other than the United States in 2011, gold, like outside of Bitcoin, you really haven't been able to get the return that the United States stock market has been able to give. So from that perspective, he's saying this is just not something to care about, given the market has probably priced this in. The big reason Moody's downgraded the US is because of deficit spending, and they simply believe the United States is on an unsustainable path when it comes to deficit spending. Here's what Bessent said is the solution to that problem that Moody's has.
There is the growth, the potential growth of the debt, but what's more important is that we grow the economy faster. So what we've seen under the past 4 years, and what we inherited, I inherited 6.7% deficit to GDP, which was the highest deficit when we were not at war, not in a recession. So we've been trying to bring down the spending, and we are going to grow the revenue side. So we are going to grow the GDP faster than the debt grows, and that will stabilize the debt to GDP, which even Secretary Yellen and I agree is the most important number.
So look, you might not agree with the solution that Bessent is bringing up in terms of faster growth versus the deficit or versus the rate of growth of the deficit, which I kind of think is the only answer unless we cut spending. Cutting spending is very controversial, very political. No president has been able to do it. Doge has not been able to do it. So kind of the only logical answer is we need to grow, and we need to grow dramatically. And that's why I think if you're not bullish on AI, you kind of have to be bullish on AI, because what else is there to be bullish on when it comes to growing out of the issues that we have, right? We need a sector of growth, whether it's humanoids, AI, robotics, FSD, whatever it is, that is a new type of growth that has not existed before to increase productivity and margins, et cetera, across the entire board. So that's his first argument. The second argument that he's making, which again, I think is pretty logical right here, NVIDIA, by the way, 133.24, is who cares? Who freaking cares? And the reason I resonate with this is because I'm not saying we shouldn't care about the US debt. I'm not saying we shouldn't care about US deficit spending. I'm not saying we shouldn't care about our debt to GDP ratio. I'm saying our debt to GDP is fundamentally better than everyone else's, because you can go buy Japanese debt at a 260% debt to GDP ratio, or you can buy the United States debt at a 97% debt to GDP ratio. It's obviously going to be the United States over Japan or the UK or China. Like, it's just like, this is an absolute nothing burger, in my opinion, based on the idea that the comparative analysis against every other country leads to the United States being the winner. Here's the next big thing. Why is this happening now? Because that's the biggest question I had on Friday. Why is, or 122%, correct. We're at 122% debt to GDP ratio, which is still way better than 260. Why is this happening right now, right? Why did the United States get this downgrade, in 2025 after Trump's first 100 days of the administration? We did get a Fitch downgrade back in 2023. That was in August. We bottomed in October, and then markets went crazy in 2024. That was like the best time to buy. So if we do get a bottoming event where we see another 10 to 15% decline again, which would be kind of crazy and unbelievable given we just went through that, but let's say that happens, historically, based on what we saw in 2023, we could get a bottom in the summer, and then we could keep going higher. Although what it says is we're probably going to get a local top in the summer based on just looking at charts from the past. And then we kind of bottom around September, October, then we Santa Claus rally November, December. But why is this happening right now? Why did this not happen during the Biden administration's 4 years? Last time I checked, we were spending like drunken sailors from 2021 to 2025 when Biden was president. And it kind of doesn't make a lot of sense. Bitcoin right here, 106.5, for Trump, who walked in, and Bessent is right. They did inherit a 6.7% debt to GDP spending ratio that was off the chain. And I'm not saying Trump didn't print a lot of money after COVID. He printed a lot of money, but Biden printed a lot of money. The Inflation Reduction Act didn't really reduce inflation. Why was our credit rating not downgraded back then? Like it makes you ask the question. Now, Fitch downgraded us, but why didn't Moody's? Why did Moody's wait until after Trump's first 100 days? And has Trump done something in his first 100 days that is so astronomically horrible for the deficit, so unbelievably unrelatable, that the market simply can't, or that the credit rating agencies simply can't put up with it, and they're like issuing this dire warning? No, absolutely not. It's been 100 days. Like, what is it? Someone explain to me, what has he done that is so dramatic? Has the deficit gone up? Yeah. And I would give him a couple of years to be able to try to resolve it and then kind of judge him. But in the first 100 days, especially given that inflation's coming down and, we're actually bringing in a little bit more revenue through tariffs, even though there's some side effects to that, I think it's kind of immature to say, okay, now's the time to say our deficit spending is going through the roof. So look, from that perspective, it does make it feel a bit political, and it's hard to say that it's not political, but it's just like, I think the timing of this matters more than anything. Here's my real big theory right here, and I don't even know if this is a conspiracy, but this is kind of my kind of core argument. I think the Toots are going to be very happy if we get any meaningful downgrade because they missed the entire run. We added 25% on the QQQ in a month. The market's most important technology index added a quarter of market capitalization in a month. That doesn't happen, bro. That, like, we're all kind of acting like it was no big deal, like it was supposed to happen, but that doesn't usually happen. And so the fact that it happened and retail pretty much made all the money here, not the institutions. I'm sure some institutions participated, but a lot of them just waited too late. I think they're waiting for something. We got $2.4 trillion of commitments from the Middle East, specifically for tech investments. I don't think any of the institutions knew how historic last week was going to be in terms of the commitments we got. And then we got inflation readings that were the lowest since April of 2020 when it comes to CPI and PPI. So from that perspective, I think this is a very easy buy the dip. I think this is the time to absolutely not panic if you get a drawdown. I think this continues to be a covered call market, and the more covered calls that you write, the better chance you have of actually benefiting from the volatility, because we're not in a rocket ship like we were in 2024. This is a market that's going to have a lot of headlines that take us up and down, and that's okay. I think that's okay. So look, we got a lot of investments from the Middle East coming. We got inflation that's coming down. We have trade deals, hopefully, that are on the way outside of what we signed with the UK. We end the China pause. A lot of those are bullish. We do have some macro issues. Not saying that we don't have debt issues, that we don't have spending issues, that we don't have, potential more inflation from the tariffs, all that stuff. But to say I'm going to sell NVIDIA and go find some other country's debt, Canada, Germany, Japan, all of these countries, by the way, have better debt ratios or better credit ratings than the United States now after what Moody's did. I just find it very hard to believe that these countries are the countries that should want investor capital across the world to fund their debt versus the United States. And no disrespect to these countries, incredible countries, but do we really think their debt is better than our debt? I just don't think so. And do we really think people are going to sell individual U.S. equities to buy their debt? It's like, no, you're not going to sell NVIDIA when they're about to sell 2.5 million chips to the Kingdom of Saudi Arabia to buy Danish debt. So from that perspective, I really, really do think this is a nothing burger. Now, what does this mean for Bitcoin? Let's talk about that, and then we'll have Steve on in about 2 minutes. Here's why I think Bitcoin's actually mooning. Moody's downgrade is good for Bitcoin. It's bad for U.S. Treasuries because who wants to buy a U.S. Treasury? Who wants to buy U.S. debt if you think that inflation or the deficit is unsustainable, right? That's the reason why that bond yields are spiking, because people are selling off the bonds. No one, right? I mean, obviously, I think we will still get a bid on the auction for treasuries, but in the short term, people are turned off by this. That's why yields are up. What doesn't get debased as a fiat currency? What can't get infinitely printed? Bitcoin. So I think the Moody's downgrade is bad for U.S. Treasuries due to deficit spending, but it's good for finite currencies with no fiat debasement, aka Bitcoin. Also, and here's the real theory for why I think Bitcoin can make all-time highs. If the U.S. can't get people to buy their bonds due to the downgrade, let's say worst case scenario, we don't have a bidder. We don't have a bidder. The Fed's going to step in because someone's got to step in. Someone's got to buy our debt. And that means QE. The Fed stops being a QT and we get some quantitative easing. The money printer restarts. Money supply goes up in terms of the M2 because that's what happens when we start buying treasuries off the balance sheet. And that is also good for Bitcoin. The other reason Bitcoin could be up is that random algos on Sunday are pumping it. I also think there's like a 30% chance that that's happening because Sunday low liquidity pumps we've seen like hundreds of times. But if the argument is that no one wants to buy US treasuries, maybe the allocation of capital goes into Bitcoin. Another thing about this is, again, if you look at Bitcoin on Google search results, you look at Robinhood in the App Store, you look at Coinbase in the App Store, this is not retail. I'm sure some retail participation is happening, but I think this has to be institutional capital. We saw that the public investment from Saudi Arabia disclosed they have 25,000 shares of MicroStrategy and $416 million of BlackRock's IBIT Bitcoin ETF. So the Saudis have been buying up Bitcoin. I would imagine more in the Middle East have been buying up Bitcoin. We don't know what's going on with China, but like it's kind of obvious that other people institutionally are realizing, hey, if we don't want to buy treasuries, one hedge against that is to just buy something that we know only has 21 million that are ever going to be available. And that is obviously Bitcoin. On top of that, gold. Gold is up about 2% right now, 3,200. It topped out at around 3,500 last week. Now it's at 3,200. And the reason gold is probably up right now is because people might not be wanting to buy treasuries either. So That's my thought on Moody's. I really think this is a nothing burger. If this is a dip, if you have covered calls, they should be okay. I think this is an easy buy the dip. I think institutions are not going to let another dip leave from them. We would have to have some massive cataclysmic event that turns this into a major credit crisis that destroys the level of goodwill that we have built over the past month and a half with China, the UK deal, and then these tariffs kind of being walked back from 24% average to 14% average rates universally right now. And I just don't see that happening. And definitely not because of Moody's. So from that perspective, not the worst thing in the world in the context of the equity markets. KM says when Amit talks with his eyes closed, we know he's in the zone. Yes, exactly. Exactly, baby. We got to get in the zone. It's a bull market. The show goes on and Moody's isn't stopping shit. Steve, how you doing, sir?
I guess you're in the zone.
Can you give me some more excitement, Steve? Can you like Sunday night futures? Know what I'm talking about? We're trying to make some money next week. Your covered calls aren't underwater anymore. Give me the energy like you went on a swing set today. I
wasn't going to say that, but do you want to tell everybody where you were when you called me?
I already told them I was on. I have zero shame of being on a swing set at 28 years old, 27 years old.
I'm worried about you.
See, I think you haven't done this. I think you haven't been on a swing set probably since you were 5 years old.
Yeah, I haven't been on a swing set since I was 5 years old.
You need to get on a swing set.
And I am worried about you going to a park by yourself where there are people around. I don't want you getting, I don't want people getting the wrong idea about you.
First of all, it's a private park near my house. There's like no one who usually comes by. But no, dude, I enjoy the swing set.
And I don't want people calling the cops on you.
Dude, that was the funniest thing. As soon as Steve said it, he was just like, oh, so you're a random guy in a park. I'm like, dude, I think about investing.
Yeah, but the perception is it's weird, and I don't want you getting on a list.
People can say whatever they want to say. I enjoy being on the swing set. So, Moody's, good or bad? What do you think?
You know what? I went somewhere for the first time today in my life, and it was amazing. I care less about Moody's. I went to Wingstop for the first time ever. It is delicious.
You never had Wingstop before?
No, I've never had Wingstop before. They just opened one 4 blocks from me. Gotta tell you, it was on point.
Okay, so we should talk more about Wingstop. Chris was bullish on their stock back in 2023.
You know what? It is so good. I will look into it.
The stock actually did really well, to be honest.
Oh.
I think he had spreads on it a while ago. But no, but going back to Moody's, like how are you interpreting this?
They're in a bad mood. Who cares?
You lived through 2008 and you saw what happened with Moody's back then. I mean, how are you thinking of it this time?
I mean, what is the U.S. debt backed by?
Our military.
There you go.
So you think there's no concern about this at all?
If the U.S. starts defaulting on its debt, we got way bigger issues in the stock market.
Yeah, I would agree. I think this was so random on a Friday night after a great week. And it makes you wonder why they did it this time, right? Like,
I don't want to go down that road. I'm just saying that I don't think it matters. I think it's
dude, I'll go down that road. Why did we not get a downgrade for the 4 years of the Biden administration?
I don't want to go down that road.
People can interpret whatever they want, but I don't see the first 100 days of the Trump administration being so different than the 4 years of the Biden administration, where we were spending even worse than where we are right now and printing even more money. Unless we were raising rates and people were like, oh, that would get things under control.
Was earnings season good?
It was spectacular.
Okay. So what do we care what Moody's says about the debt? And here's where I get annoyed with where we are in society. Information moves so quickly, and there are going to be so many people putting so many spins on this. At the end of the day, does Moody's downgrading the debt matter for Apple? Does it matter for NVIDIA? Does it matter for Amazon? No, not in the slightest. It's ridiculous. The whole idea that the market cares about what Moody's says about the debt doesn't matter. Is the U.S. paying its debt? Yes or no? If it is, move on.
Yeah, we are paying our debt. I mean, that's the other thing. If we're not defaulting anytime soon, then I don't know why people won't buy our debt. And look, when we do default, then yeah, people have a reason not to buy our debt. But I mean, that hasn't happened ever. And it doesn't look like it's happening anytime soon.
Yeah, I just think it's a nothing burger. I think too many people make a big deal about it. And, we should be worried about what the Fed is doing, what the Fed is getting wrong at this point. Because you know what? The Fed needs to start cutting, not just for companies, not just for individuals, but for the U.S. to refinance at better rates. They need to start playing ball. And I'm starting to really wonder if the Fed should even be independent at this point.
Well, this is an article from 8 years ago. Moody's paid $864 million in penalty fees for rating mortgage-backed securities that were junk bonds to 2008 in the 2008 financial crisis as AAA. Like, if anyone needs any evidence,
they thought that they were so diversified that they wouldn't fail. Obviously, a lot of people got that wrong. This is a much different situation, and once again, it doesn't matter. Invest in quality companies, and if we get a week or two of sell-offs, it's an opportunity, most likely.
Yeah, and the other thing that's really important about this is that I don't know if you saw the Michigan Consumer Sentiment Survey, but on Friday that came out, and the expectations were 7% inflation by next year. The sample size was 200 people, and if you look at the split, the majority of those people were Democrats. So I think a lot of these ratings that ironically the Fed...
Oh, I'm sorry. They surveyed 200 people?
Out of 330 million people in the United States, correct.
I'm sure as hell not listening to that survey.
I couldn't believe it. CNBC was like, so the sample size was 200 people. I had to pause the stream. I was like, 200 people. Like,
this is when people either have too much time on their hands or they don't know what they're doing. Because I'm sorry, 200 people in 2025, you can't figure out how to get a bigger sample size? Come on. Doesn't matter.
The Fed looks at Michigan. The Fed looks at Moody's. I think even the Fed, if they have
the
any
Fed
level,
needs to start using logic.
If the Fed has any level of respect for themselves, they would stop looking at some of these.
They need to stop playing chicken with Trump. They need to stop worrying about who's going to step down first, who's going to back down. Doesn't matter. What matters is the American people. You know what? The economy is going to be stronger with a lower interest rate. At the end of the day, unemployment is going up and inflation is going down. Oil is still lower, which means input costs go down. I don't know why they're not looking at this, but when Microsoft lays off 2% of their workforce, 6,000 people, and you have Zuckerberg and everybody else coming out talking about the efficiencies with AI, and we know that corporations took out a lot of debt at low rates during the pandemic, and a 5-year cycle is now upon us. We also know that the government needs to refinance a large slate of debt. Why would we not want to put the country in the best position to succeed? It is mind-boggling that people on the Fed are worried about inflation maybe going back to 3 or 3.5%. Who cares? Does it really matter in the grand scheme of things? These numbers are like the boogeyman, but it's irrelevant because the boogeyman's not real. If it's $102 or $103 or $104 next year on goods versus the U.S. and corporations getting a better rate on refinancing debt to make sure that we have a booming economy and more jobs at a time when big companies are laying people off, that's a sacrifice we should be willing to take.
Unemployment mattering a lot more than inflation. I would tend to agree. By the way, Jonam right here says, Steve, I bought the Milano raspberry chocolate from Amazon. It is so damn good.
All right. Raspberry and chocolate go together. Russell Silvers did not get it wrong. Sorry.
I'm not going to apologize to Steve because I haven't tried it yet. But if I try it, then, I'll issue a public apology.
Russell Silvers has a whole campaign at Easter, and several pieces are a combination of raspberry and dark chocolate. It is delicious. It is a great combo.
I will have to try it out. I will definitely try it this week. I will try to try it out. Futures are currently right now still a bit red. So, Steve, I want to get your reaction to this clip right here from Bessent. We did have another headline today outside of Moody's that was about Walmart. Let's take a listen to this, and I want to get your reaction to it.
On social media, Walmart, quote, should eat the tariffs, adding the company made far more than expected last year. Is the president asking American companies to be less profitable?
I was on the phone with Doug McMillon, the CEO of Walmart, yesterday, and Walmart is, in fact, going to, as you describe it, eat some of the tariffs that just as they did in 18, 19, and 20. The other thing, though, that we are seeing that Doug passed along to me, that with their consumer, the single most important thing is the gasoline price. And gasoline prices have collapsed under President Trump. So we are seeing that. The other thing that will happen, that is a direct tax cut for consumers. Then the transportation costs are also a big input. So let's see what happens. What you were describing was Walmart's earnings call. The other thing that companies have to do, they have to give the worst case scenario so that they're not sued. So, I think overall we are seeing a decline in services, inflation, and we saw inflation come down for the first time in 4 years.
Well, in my conversation with former Vice President Mike Pence, he says he sees tariff as a tax. How far, Mr. Secretary, is the president, is the administration willing to go to prevent CEOs from increasing prices?
Well, I think what we are hearing here is that people are saying tax increases are inflationary. That when I was testifying before Congress last week, one of the congressmen said that, and I said, well, Congressman, if taxes are inflationary, let's cut taxes. So let's get this tax bill done, bring down taxes, which according to this line of thinking should be disinflationary.
But the Federal Reserve.
This is actually a pretty smart response by Bessent to kind of get out of that. But let's bring on another person on the show and get some of their analysis. Mr. Christopher Patel. Chris, thanks for being here. You just heard what he said about Walmart and the president trying to tell them to eat the tariffs. What is your reaction to that?
I mean, that's some Bernie Sanders, Elizabeth Warren kind of shit, bro. I'm not into like the government coming in and telling companies how to run their businesses and and basically apologize for things. I'm not about that life. Like, government's job is to put policy, and it's the business's job to figure out how to navigate their way around the policy, and that's it. So if Walmart says, hey, listen, we're raising prices because our margins are getting squeezed, fine, that's on Walmart's prerogative, not a big deal. This whole thing with the administration coming in and saying, no, you're going to set prices how we like you to set prices and all this other stuff, that's just dumb. The one thing I'll tell you though is when you look at the tariffs, right, the total impact of the tariffs, first and foremost, you look at our GDP. We have a $30 trillion GDP. The amount of imports that we have is about 4 trillion of actual imports, right? So not a big percentage. Then you have all these carve outs with regards to how much we're actually going to be charging, right? So basically there's all these exemptions that are there. So it's like maybe 1 to maybe even 2 trillion worth of goods that are actually being tariffed. And then they're being tariffed maybe 10% for most of them, and then 30 for the ones from China. So the total impact is not nearly as bad as people think. So if you look at the whole picture, most of our economy runs on services, not on imported goods. If let's say right now half of our economy was imported goods, then yeah, you could say that a tariff would actually increase inflation significantly. Will there be an increase in inflation? Maybe a little bit, but I don't think it's going to be by much. So I'm not worried about the tariffs when it comes to actually prices of things going up. Not to mention aggregate demand as prices go up tends to fall, right? So as an example, if you were going to buy something, the price is higher, but you don't have the money to buy it, you're not going to buy it, right? So if the economy is weakening, the consumer, you're draining consumer liquidity, you're not actually going to get inflation. So all the restarts with student loans, all the forbearance programs that the Trump administration has ended when it came to Fannie and Freddie, or at least they're trying to cut those things off. You're trying to kick people off of Medicaid that might not belong there, people in 2 different states and all this other stuff. So from a legislative standpoint, they're draining liquidity from the consumer. And yes, the tariffs are there, but the tariffs go right back into the pockets of the coffers of the United States. So I don't necessarily think that this is going to be a major problem. You know,
Steve, your reaction to Trump saying Walmart should eat the tariffs?
Well, we live in a free market society. So if Walmart is charging a price where people are unwilling to pay, they're going to adjust regardless. I mean, it comes down to what is the fair market value for the goods it's trying to sell against its competitors. You let the market set the price.
So you think Trump should not be telling them to eat the tariffs?
well,
I think
also,
that the market's going to let the free market is going to dictate what the price is going to be, and people should let companies run their own business.
yeah, and also remember, when you have tariffs, you're getting tariffed at the wholesale level. At the retail level, you're doing your own markups, right? So to some degree, Walmart will eat the tariffs. Walmart will actually go to China and say to their suppliers, "Hey, you're going to have to give us a bit of a cut." You know, which I'm sure, because Walmart's a behemoth, they're going to be able to extract out of. So I don't think the total impact to the consumer is not going to be nearly as much as people assuming it will be. You know.
Okay, so Chris, your general reaction to Moody's. We got Steve's thoughts, but do you think it's a big deal?
I mean, if they were the first ones to do it, then yeah, I think there would be a major problem, because the thing is, a lot of contracts, a lot of things, a lot of funds are set up to only buy AAA. But I think over time they've kind of adjusted themselves. I think Sam Solid, he actually put out something really interesting on his Twitter about that. And so I think the world is kind of already, you know, moved on from the US losing its AAA credit status and has already gotten used to it being one notch below. This is more of a signal that, hey, the United States needs to get its fiscal health in order, because otherwise it's going to, you know, we're not headed in the right direction when it comes to the government, the country's fiscal health. The Republicans with their endless tax cuts and the Democrats with their endless social spending is really bad. Like if you look at like the number of people like Medicaid, like 22% of the population right now is on Medicaid. 22% of the people. Can you freaking believe that shit? Like it's a lot of these programs were originally meant to help people get to a certain stage where they would get off of these programs, but the Democrats in certain parts of the country have turned them into basically lifelong dependence. You know, like how do you? I don't get this part. How do you have the fattest nation on the planet and at the same time spend so much money on SNAP benefits? Like I feel like you should be weight tested. Like if you have a certain weight and you walk into, let's say, Kroger or Pathmark or Key Food or whatever, and you have a SNAP card, you just take that away. Like nope. You need to lose some weight before we give this back to you. What do you think about that?
I would not do that. That would be Steve.
Idea, Chris.
Yeah, it's probably not the best idea.
I'm just
Horrible
joking
idea.
about that. But the point is, when you see people abuse the system, because there's clearly a ton of abuse. Okay, I've seen it personally where people, like my brother has a gas station. There's people that will come in and be like, "Hey, do you want to buy food stamps?" Or they'll basically like go to like a store and sell their food stamps to somebody, and basically they'll take that money and buy cigarettes and beer with it. Right?
Yeah, I mean,
it's a thing that happens.
Speaking of the SNAP benefits, there was a good clip from Olin right here, and Friedberg is kind of talking exactly about what you're saying right here.
It on YouTube, and we talked a little bit about how this SNAP program has absolutely exploded in size from 60 billion a year in 2019 to 120 billion a year today. So in this budget proposal, they're actually cutting it back by about 30 billion, so to 90 billion. So it's still 50% higher than it was pre-COVID. And there's a lot of kind of stories we could go through on what happened during COVID that caused this thing to blow up the way it did. Political wrangling pulled money out of the government into people's pockets, and that is persisting today. I'm a big...
So I wouldn't like test people when they walk to a store, but your point is absolutely correct that we are spending double what we were spending pre-COVID, and now it's down to 90 billion instead of 60 billion, but that's still an extra 30 billion. And when we talk about getting cuts, like if we're going to keep spending on shit like this, it's going to be pretty
I mean,
impossible.
look, honestly, I think SNAP existed basically because of the lobbying groups like Coke, Pepsi, Frito-Lay's. You know, these guys are the ones that are actually making the money. All right. All these SNAP benefits are going to these guys. And all of this food is just junk food that's basically adding to the problem. So let me tell you, this is how it works. You get on SNAP, you get all this unhealthy food, you get fat, then you get on Medicaid and you start on all these diabetes medications and like health issues, right? And then you bankrupt the government that way. And it just keeps going on and on and on. No work requirements, no means testing. Like do you know how many people right now, they're on food stamps, but have like husbands that work full-time jobs making 80, 90K in Brooklyn? I'm not going to say who, but people know, okay? There are ways that people game the system. And the thing is, we have become so good as a country. Like, this is for the poor. Only the poor use SNAP. Only the poor people have Section 8. Trust me, there's plenty of people gaming the system. Tons of people gaming the system. There's even people like if you ask certain landlords who have Section 8, there's Section 8 tenants that will get a Section 8 voucher and then what is it called? Like re-rent to sublet to somebody else. Have you heard of that? That happens too. Yeah.
So Steve, I want your take here. How would because there is an issue with our deficit spending, and Moody's is clearly outlining that, even if it's a bullshit downgrade. But how do you think the U.S. can resolve it? Is it just we grow? Is that the answer, or what is your kind of take here?
No comment.
Okay, so it's we grow. I mean, like you got to have some thoughts on how we navigate it, or we just accept higher inflation, and that's all that matters. Steve, you got to say something. Like, you either have a comment or you don't. Like,
No, I told you, no comment.
So someone brought up a really good, some good comment that was up there. Said, what was it? They said that just because some people are doing this, we should kick all the people off. No, I'm not saying that. I'm saying that we need enforcement mechanisms that make sure that these programs are not being abused. Okay. And some of these programs aren't just in terms of being abused like fraudulently, but some people have become so dependent that they're not even trying to get out of that cycle anymore, where it's like, yeah, you know what, I could work, but why should I when I could just get these benefits? You know, like there's 7 million jobs out there right now, yet some of these people, they don't look for jobs, they don't want to work. No, I can't work, you know, I have anxiety. Bro, everyone's got anxiety. Get your ass to work. You know, I still remember like, I have trouble waking up at what is that thing, on time in the morning. That's why I keep getting fired. That's not an excuse, you know? And so what do? It's okay. You know, you can't get up at 8 in the morning. We should just give you, we should just give you all these benefits. Why? No, hunger is a great motivator to wake up at 8 in the morning. Okay. And go to work.
Yeah, I mean, look, I don't think there's ever going to be a meaningful solution to this stuff, but there have to be some type of reforms. And Bobby's trying to do that, right? RFK is trying to get soda off the SNAP stuff. Like, I mean, there are some types of reforms that are getting implemented, but I don't think there's any sort of meaningful reversal of it currently right now.
Yeah.
Okay.
By the way, one last thing I'll tell you. We need to bring shame back to public. What is that thing called? To public utilization of public services. The reason why I say shame, and I'm not saying like people shouldn't use public services, but this thing with normalizing people to basically utilize public services all the time. You know, back in the day, people were proud that, you know what, I am not on public assistance. I'm not trying to be a what is it called? Like someone that just mooches off the government. Like there's self-pride. There's people that feel like, you know what, I could game the system, but I'm not going to, because that's not who I am. And I think certain level of morality is gone from that, where people are just like, nah, it's okay to just use all of these benefits. You know, there's just not as much shame as it was in the past. You know, have you guys ever felt that that's the case anymore?
I think Steve's going to have no comment. Steve, you have a comment?
Nope.
Yeah, dude. I mean, look, my thoughts are obviously I'm a product of a lot of these public programs as well. So I do think they are important, but we can't keep spending the way we've spent. And so I don't know what the solution is. And I don't know if Trump's going to have a solution in the next 4 years, but there's got to be something that does not.
You know what? I will say this. Somebody better start thinking about what everybody's going to do for work in the next 10 years.
There should be a list, a public list with your name on it, where basically if you take food stamps, you take all of these things, it's publicly listed what you take and which government program you're on.
Well,
this way,
why you're not
this way people, and at the same time, you should do that for taxes too. So if you're Donald Trump and you pay zero in taxes, everyone should know you fucking paid zero in taxes. So it's both. If you're wealthy and you're not paying your taxes, you're right there publicly. If you're a person who's mooching off the government and you know you have no qualms about it, boom, you're right there also. You know.
How about rewrite the tax code, make it one page. We don't need a tax code as intricate as it is. And we better have people thinking about what everybody's going to do for work when AI and autonomous vehicles and true efficiency comes to the market in the next 5 to 10 years. The job market is going to get very disrupted. We've never experienced anything like this. People are trying to use the analogy of 98% of people worked on a farm and now 2% of people. It's a lot different now. And this is going to be the biggest disruptor we've ever seen. And what Microsoft just did, what Meta's doing, it's going to only get worse. So people better start thinking about what we're going to do as a country in the future.
Okay, so can we talk about what's going on with Microsoft? So Microsoft, that 3% announcement of a layoff today, or on Friday, that has been disclosed by multiple sources that is not just middle management that Microsoft said it was. It was AI that replaced at least some of that 3% of the workforce. So I guess I'll bring up the headline right here, but I guess kind of your perspective on that, Steve, like if it really is 3%.
It's not good. Look, you can go to the earnings call from Q1 when Zuckerberg spent at least 2 minutes discussing how at least half of his engineers would be able to be replaced by AI by the end of this year, or by the end of next year, most of them. We can't comprehend how quickly this is extrapolating and how much better it's getting every day. And the whole movement of learn to code, kids have spent the past 4 to 8 years learning to code because there's less manual jobs out there. They are now 3D printing the walls of houses. They 3D printed a Starbucks. These things are real, what's happening. And when you add AI to robotics, it's not going to happen tomorrow, but in the next 5 to 10 years, we are going to see the greatest transfer in jobs occur. And I don't think people are really ready for what's going to happen. And we better start thinking about how we're going to move forward as a society.
Chris, your thoughts? Microsoft laying off people? Do we need to expect more of that going into Q2, Q3?
I mean, from what I can see, income inequality is just going to grow significantly. You know, and the gap between rich and poor is going to widen significantly. So, you know, not everyone's going to be able to adjust to the new economy, or are going to have the skills and the training that they're going to need in order to adjust. So I don't know. There's definitely some major changes coming our way, but I think every major technological wave tends to have people who are going to over excel, and then there's going to be people who get left behind. That's just like. Here's an example. In the 1980s, you ever heard of a transcriptionist, where, you know, all these people were just there to just type things up? Like they would actually put things physically in a typewriter and type things up. There's no more people doing typewriters, right? Does that mean that, like, oh my God, the economy just went down the drain? Like, no, there's new things came up. With AI, it's going to be the same thing. So I think there's going to be tons of jobs that AI is going to kill, but then there's new jobs that are going to be created also. You know, so I think this is just, we should never become Luddites. Do you know who the Luddites were? I'm sure you know, Stephen, right? Do you know who the Luddites were?
It's
basically
people that did embrace technology back in the 1800s, right?
Yeah, in the 1800s, like when I think it came with the cotton gin. There were people was it cotton gin? No, let me see. It was something to do with like weavers or something, where basically new. Oh, here it is. This is what a Luddite looks like. right here, like this. So basically, Luddites were a person opposed to new technology or ways of working. So they were a band of English workers who destroyed machinery, especially in cotton and wool mills, that they believed were threatening their jobs. You know, so imagine right now there's all these people that are saying we shouldn't embrace AI because it'll take our jobs, and they just wouldn't get with the program, but things happen anyway. So,
But Chris, what do you do when I don't think it's crazy to say that in the next 5 to 10 years, we are going to see full-blown autonomous trucking and light vehicles? I mean, we're already there to some extent, but in 5 to 10 years, the technology is going to get so good and it's going to be vastly out there in the marketplace. What happens?
I think AI is meant to supplement the human labor force, not to replace it. So here's an example. You're saying autonomous, like an autonomous truck, right? What are we going to have? Like people, who's going to load the trucks?
Robots.
You know?
And I'm not saying that to be funny, but really think about it. They have Optimus walking around the Tesla factory charging itself now. In 10 years from now, why are we going to think that a company such as, I'm not going to use any company because I don't want anybody to get upset, but company XYZ has to move a load of goods to a different store. You have two robots in the truck. The truck automatically goes there. The robots unload it. No workman comp claims. No insurance factors from GL. Only just insuring the vehicle. And I know it sounds crazy, but there are so many benefits to the actual company with that. And it creates efficiencies. I think that we really need to worry about these things. And it's not just with that. It is with every other thing that humans are doing right now. There are so many jobs that are going to be at risk when autonomous really comes into the market and robots come into the market. If Optimus is $20,000 to $25,000, and in 10 years from now, a quarter of the homes have them, and autonomous is cutting your grass, doing your dishes, doing all those things. You got landscaping that's going to go downhill. You also have people that are going to start businesses around robots. So I get that aspect, but not everybody's going to be able to own a business with robots. You have tremendous industrial cleaning, commercial cleaning, also residential cleaning. You have so many things that are going to get displaced. I just don't know if the economy is ready for what it looks like the road is going to go down.
I mean, I don't know, dude. I'm still of the mind that robots are going to help supplement the labor force, not necessarily replace us. I mean, if anything, it might accelerate our ventures to Mars, right? With robots and stuff like that. So I think new industries will come up, you know, new ways of things will come up. I see the future where we have more robots around doing things. I've seen it at my hospital where basically you have robots delivering medications from place to place, but that doesn't mean that's going to take away from the nurses that are actually administering those medications and stuff, right? Same thing with so many jobs. So I think like radiologists, like I know a bunch of people have been saying for the last 10 years, oh, the AI is going to replace the radiologists. We're not going to need them anymore. And it's like, no, it's just going to make their lives a little bit easier where, you know, when they get something, they'll get a diagnosis that's going to help them, you know, not miss things. So I think the quality of goods, quality of services will go up tremendously. Productivity will increase tremendously. I don't necessarily think that like there's this situation where the worker is going to be completely out of the loop.
Chris,
you know, there's still...
that.
Yeah.
You work in a hospital.
Mm-hmm.
Obviously, your hospital uses Intuitive Surgical's machines.
Yes.
Okay. What happens in 5 to 10 years when those machines are performing surgeries on their own?
There's too many liability issues with the machines to actually fully do it. If anything, there'll be a guy controlling the machine doing the surgery rather than
the surgeon already controls the machine. At some point,
what I'm saying. That's what it is.
At some point, these are going to get good enough where they're going to be doing the surgeries on their own. At some point, technology is going to get to the point where we don't need coders, where we don't need engineers anymore. I mean, it's advancing so quickly.
Well, let me bring up a chart right here, because from a stock market perspective, I think this is what we all need to care about. This is Netscape, the first browser that came out in December 1994, compared to ChatGPT that came out in December or November of 2022. The first 617 days, the market, NASDAQ, was up 90%. For ChatGPT, in the first 617 days, we were up 74%. Meaning, after the first basically 2 years when the browser came out, we were up 20% more than after the first 2 years on the NASDAQ after ChatGPT came out. If you stretch it out past those 617 days, the red line is ChatGPT, the blue line is Netscape, or is the NASDAQ after the Netscape browser was out. We've got a lot higher to go. Like, that's where the market is currently right now, that red line. It seems kind of aggressive based on everything you're saying about robots taking over, jobs, all that stuff, autonomous. From a market perspective, if that thesis actually does play out, aka we don't just get an internet browser, but we get something that can do our dishes because of AGI, stocks are going higher.
Yeah, you want to be in big tech, and you just said AGI. What happens when it gets so good with AI that movie studios no longer need all the people in production? What happens when we already see it with Grok and ChatGPT? You can have it tell you a story and all this other stuff. What happens when it gets to the point in 5, 10, 15 years where you can just tell Netflix to create, I don't like the way Sons of Anarchy ended, create me another season with half-an-hour episodes instead of hour episodes? At some point, we're going to be able to have that type of technology. All I'm saying is people need to really think about where we've gone with tech over the past 40 years and how quickly of a difference the past 3 years has been compared to the past 10, and then back out 15. I mean, it is expanding so rapidly. I just don't think people are really ready for what's happening. I mean, I'll tell you this. Cloud computing and what platforms, ERP platforms are able to do and what they did completely changed back office services with finance and HR. We're getting to the point where we're going to see a much bigger shift than what those did. And those made departments shrink rapidly.
Well, I guess we got to own big tech then. I mean, that's the answer, right? I know there's more of an existential question you're asking, but the answer is own big tech as much as you possibly can. And
Yes.
Go ahead.
Big tech is going to benefit on a stock. No question about that.
Well,
but at the same time, we have to at least be willing to think that if this is the rate the technology has changed since it's been 2 years since the ChatGPT moment. Yeah. I would argue that technology has changed drastically in 2 years. What happens when you get the next 10 years based off of the rate of change and what we have right now? I mean, Zuck is telling you, these guys have been telling you what's going to happen. You can't think that in 10 years, these guys don't know what they're talking about, and people that are coding are still going to be coding. And if they're not coding, which is what everybody was telling people to do, what are they going to be doing for jobs?
I don't know, but I know that big tech is the answer. And I'm saying I don't know because I have no freaking clue. I don't know.
I'm going to disagree that there's going to be this world where we're not going to need coders. I think what it is the people that are really good at coding, it's going to enhance their ability 10x. And the people that are basically there just doing the grunt work, they have some challenges that they're going to have to overcome. But I don't think that it's going to be like, oh, let's just get rid of all the coders. Then what are you going to have?
But that's my point. What are you going to have? You're not going to need, if Meta has 50,000 coders, okay, maybe in the future they're going to need 5,000 as coders / managers, because they're going to be more prompting the programs to do what they needed to do rather than writing all the lines of code. I'm not saying everybody is going to be extinct, but we're going to see such a shift into efficiency that the footprint is going to be so much smaller.
I think to a certain degree you were correct that yes, but once again, those people that are out of their coding jobs, they'll find other things to do too. It's not going to be just everyone. What is everyone going to do? Just stay at home and be like, man, I used to be a
Chris,
coder
that's
back
what I'm
in
saying.
2000. Yeah.
What are these people going to do? Because there's less and less stuff out there. Companies are not expanding. Not everybody can own real estate. Not everybody can collect income. And when you have robots really advance, what happens when they start doing blue collar jobs? What
They'll
happens
become
when you start
YouTubers.
having-
They'll all become YouTubers or TikTokers doing weird dances and
There's-
shit. I mean, look at what Ahmed does. Ahmed's like, I got a job. You see, his job didn't
even
exist.
though
His job didn't exist 12 years ago,
I
right?
get that, but even though he went and just swung on a swing set today,
Mhm.
not everybody is going to be able to do 10 hours of video a day like him and hold people's attention.
Dude, you know the first thing I did on Friday after the market closed? I got me a swing set. And I do. That's how I relax, bro. After a long week, just swinging up and I think people should try it out. Doesn't matter how
I
old
think
you
you
are.
should stop going to the park because I don't want you getting in trouble. But
My thing is, if you would have asked someone 12 years ago when YouTube and all these things first came out, that people would be making a profession by dancing on the internet, like there's going to be 1 million people out just dancing. And then there's going to be these women that show their feet pics and making millions of dollars. That wouldn't have even been a thought. Like,
No,
but guess what? It
Chris does
happened.
have a point, Steve. You're painting a very doomsday scenario.
I agree with Chris on that. Nobody would have thought that those things, nobody would have thought you could have made money on Twitch streaming video games.
So how would we
I get
know?
it.
How would we know what the world of AI is going to come to if we don't know what those jobs would look like?
We don't. All
Yeah,
I'm
what about
saying is that-
space? What about space? Look at all these rockets that are going up, bro. What if people are like, yeah, you know what? I want to be an explorer. I want to set up the next moon colony on Mars. You know, what are you going to do with that? You don't know if that's going to be a real thing. And maybe the robots are going to be there to assist us in building this robot colony. You know, go explore the stars. Let us do the things that maybe right now we don't have the labor force to do. Not to mention the world's population is in decline anyway. That's another major thing that, you know, we haven't even really spoken about. But
Yeah.
United
Okay.
States of space. That's where we're going. Red rocks.
I want to show this right here. So here's the question: is big tech still getting disrespected? Look at this analysis right here. So Walmart has a 42 PE. Amazon trades at 33. In Q1, Walmart sales grew by 2.5%, and they have a 2.5% net income margin, which is why Trump saying they should eat the tariffs is a little weird. Amazon grew by 8.6% sales, and they have an 11% margin, 11.8% operating margin, with obviously a lot of potential to grow it. Yet people are still paying a more expensive premium from Walmart. So the question is to you, Steve, why is big tech still getting this disrespected?
I have no idea, but it doesn't make any sense. I can bring it up again. I mean, I don't want to bring it up because we've looked at it before, but if you want to do the side by side, I'll just pull out those two. Amazon has more than double the EPS growth over the next 2 years than Walmart, yet is trading at a fraction of the multiple. Walmart also has no footprint in cloud services, nor will they ever, because they're not a tech company. They utilize tech for logistics and inventory controls and everything else, but they're never going to compete on a cloud infrastructure segment. It is ridiculous that they have a higher valuation on a PE basis than Amazon. And it's crazy that Meta and Alphabet and NVIDIA have a lower forward multiple than Procter & Gamble, Coca-Cola, 3M. It's just crazy.
Chris, your thoughts? Why are we still getting so disrespected or why do you think big tech is cheap compared to retailers?
I think there's just a lot of legislative risk that the big tech guys are getting right now. I mean, Meta is being investigated by the DOJ. Google's being investigated by the DOJ. Amazon is getting investigated by the DOJ. I mean, literally, it's like the challenge is this with big tech. When you got too big, they got too much power, and so the government's like, "Oh, wait a second, I need to make sure I cut these guys off at the knees before they end up becoming too powerful." And this is not just like the Trump administration doing this. This is the Biden administration doing this too, where they're afraid of these companies because they control and they exert more power than some of the most, some of the sovereign countries on the planet. So I don't know. It's just, I think it's a matter of people just saying, well, what is the likelihood that these companies are going to get broken up? What is the legislative impact that's going to come from certain changes? So, yeah.
Let's use Amazon. Okay.
Mm-hmm.
There is no way they can break Amazon up, and here's why. There are two main, and let me know, I'm going to go point by point. would you agree that Amazon's main lines of business is its e-commerce platform and its cloud services?
I mean, I think their advertising arm.
And
is
okay, I'll
really-
give you advertising too. So break it up into 3 tranches: advertising, cloud services, e-commerce.
Mhm. Yeah.
Okay.
I think all of them are good. But the challenge, once again,
but hold on.
yeah.
In order
Yeah.
to be broken up for antitrust, what needs to happen? You need to prove that they're a monopoly and it is bad for the consumer.
Mhm.
Cloud services. You have Alphabet, you have Microsoft, which are Microsoft and AWS, Azure and AWS neck and neck. Google Cloud really making a segue into the market. AWS is 33% of the market, not monopoly.
Yeah.
E-commerce. Walmart generates more revenue than Amazon company versus company. Then you got Target, Costco.
Well, no, I'm
What
not
we
saying,
do.
listen, I'm not saying that Amazon is a monopoly. I'm just saying legislatively, these guys keep hammering them. And that headline risk, that headline risk is why they're, no, but
anybody
that's
to
what
be able to prove that they're a monopoly or for them to get broken up.
right. But that's what I'm trying to say, that the headline risk is why the valuations are depressed. That's what I'm saying.
I would agree with that. I
Yeah.
think people need to stop looking at the headline risk and really look at the actual due diligence of it, because even with advertising, Amazon's advertising is smaller than Google and Meta,
Yeah.
the third largest. Like, there's no way it's a monopoly. And then you want to talk about Alphabet. Alphabet is a monopoly in search. Other than that, it's not a monopoly because there is competition every which way. Android and Apple neck and neck.
My take on this is that if the DOJ or the FTC or the monopolistic practices are the reason why Walmart and Costco are more expensive than big tech, then even if we don't get the gains by the end of the year, this is an accumulation year for big tech. It's just that simple.
Can we really look at let's just look at Amazon and Walmart. We don't need to look.
Well, but before we get into that, hold on. I want to show a stat that maybe convinces Chris to finally buy NVIDIA. Hopefully. It probably won't, but still. Look at this stat, bro. Morgan Stanley estimates that NVIDIA's Blackwell chip sold 1,500 in April, the racks for those chips, up from 1,000 in all of Q1. Chris, when are you taking a look at Big Daddy NVIDIA here? Like, what is the hesitation that stops you on this one?
I got the cruise lines, bro. That's where I want to be.
God.
You can own both.
Friday. They were up on
I want to be part of the cruise lines, bro. That's where that's where the money is.
NVIDIA's cheaper than Costco and Walmart right now. You see a stat like this. We know that they're getting all this money from the UAE. How is it not something where you're like, hey, maybe I throw in 100 shares?
The biggest challenge for me when it comes to these things are the rapid rate of innovation is really there for these guys. I see it. But at the same time, I also know that there's cyclicality in this. And so they're going to be cyclical.
Yeah, but Chris, the
changes that
cycle of AI, it looks like it's on a pretty large trajectory. Minimum 5 years.
That's what they all look like, dude. That's what they all look like before the bottoms fall out. But I'm not saying the bottom's going to fall out. I'm just saying I'm looking at other companies that, to me, there's better value out there in a recovery scenario. So
look, it's a fair take. I think I'm being.
It's already a $3 trillion market cap company, right?
Yeah,
that means that they have to.
People were saying Apple was already $1 trillion company. Like,
that's true too.
Companies are going to keep getting bigger, especially as earnings expand.
My thing is, I'm going to be watching hard on the hyperscalers and how much money that they're spending on this. So right now they're reaching into the sovereign AI market. Great. I don't know. We'll see.
I'm almost done building something, but I want to show you guys the big difference between Amazon and Walmart and why this has me so angry about so many things. It's just, when I'm building this out, my blood is boiling right now, like boiling.
Okay, so while you're pulling that up, Bitcoin, Chris, you think Moody's is a catalyst for BTC?
I mean, I think the government's ability to not do the right thing is a catalyst for BTC. I mean, like I said, if the Democrats keep pushing, social programs that bankrupt us, and the Republicans keep pushing tax cut that bankrupt us, People are going to say, well, look, these guys, all they're doing is just printing. They're not willing to cut. So why would I want to be in that currency? Why wouldn't I just be in something that is a lot more limited, which is why gold is higher and Bitcoin is higher. So all additional capital is going there. Not to mention the Bitcoin maxis, from what I can tell, bro, there's no exit for Bitcoin maxis. All right. When these motherfuckers buy, I'm sorry, I cursed. When these guys buy, they do not sell. They're like, no, we're going to hodl this. So the amount of liquidity that's coming on the market is very little to none. So that causes prices to keep moving higher and higher. I was talking to Matt, and Matt's like, yeah, every month I just buy a little bit of Bitcoin. I'm like, huh, interesting. And I think there's a lot of people that keep doing that. So, and look at Saylor. The one thing I'll say that there will be a point where it might be a good idea to short MicroStrategy and go long Bitcoin, like Chanos is suggesting. Okay.
Before you get into your take, I think I have that video that we could watch real quick. Because he did make headlines this week saying that, and his point was like, I'm doing exactly what Saylor's doing. Saylor is selling MicroStrategy via dilution to raise money to buy Bitcoin. Here's what Chano said.
You're short MicroStrategy.
Yeah.
And you have been for a good while?
A good while. You're on and off for the last couple of years.
Why so? Because it's so levered to the price of Bitcoin?
We're short the spread. So that's the important thing that your viewers need to understand. I don't know where Bitcoin's going. 100,000, a million, 10,000. I don't know. I don't think anybody else knows. But what I do know is it's generally profitable to short $1 for $2.50 or $3. And if you look at where MicroStrategy, and now more ominously, some of it copycat companies that are now raising lots of money, are doing is they are basically selling retail investors the idea that we are going to buy Bitcoin in a corporate structure because of what MicroStrategy has done. You should value us at a similar premium, and therefore earnings are created by the difference between what new investors are paying, what the net asset value is. But it's ridiculous. And so what we're doing is we're doing exactly what MicroStrategy and Michael Saylor are doing. We're selling MicroStrategy stock and buying Bitcoin, and basically buying something for $1, selling it for $2.50.
If Bitcoin continues to go up, is that the most direct impact to how your trade is going to work?
The premium fluctuates, and the premium is a really good barometer of speculation in the market. So we're back at premiums to NAV where we were at the end of last year, December of 2024. The premium came way in 5-6 weeks ago when the markets were getting upset. It's right back up. And so this is a good barometer, not only just of the arbitrage itself, but I think of retail speculation.
So Chris, you agree? Would you short MicroStrategy right now, or you think it gets to a point where
I have to do the math on it? But there are points where if you look at the total outstanding share count of MicroStrategy, especially once you factor in all the convertibles that are in there, what ends up happening is you've got all these Bitcoin on the balance sheet, but you've also got a ton of debt. So a lot of people, they say, well, MicroStrategy has X amount of Bitcoin. That means that the value should be X, right, of the market cap. But what they're not taking a look at is the convertible portion of that debt. Now, some of it was issued at a premium, which is great. That means that they were able to basically, buy at quote unquote at a cheaper price of the stock. The challenge is if your stock stays under and that fully converts via dollar amount, that means a MicroStrategy would never have to sell Bitcoin in order to pay those creditors. Now, the game that Saylor is playing is a very interesting one, where they keep issuing this debt, buying MicroStrategy. Their logic is, well, what we're doing is essentially using fiat to basically buy more Bitcoin. The challenge is if the NAV ends up going too high, too crazy, then it actually makes sense to short MicroStrategy and just go long Bitcoin. So if the drop happens in MicroStrategy, let's say there's a 50% drop in MicroStrategy, but at the same time, Bitcoin only drops by, let's say 10 for 15%, you make money on that spread.
Right.
Okay.
Right.
And that's the key. So what you have to do here is basically take the price of MicroStrategy's net asset value and then layer it against Bitcoin, because your Bitcoin position is covering your MicroStrategy short. Okay, so MicroStrategy, look at the price. It literally fell go to the stock price of MicroStrategy, and then do like the percentage of Bitcoin against it, like weigh Bitcoin against it. And there are periods where you can make money on that spread, you know.
Yeah, that is true. Why is Google not allowing me to compare it to Bitcoin? BTC. Yeah, it's not allowing me to do it to Bitcoin, but you're right. That obviously the premium got hit, and as a result, that's why it fell the way it did. I think the problem though with shorting MSTR is because the retail speculation market might drive the premium even higher, regardless of if it doesn't make sense. Like at 2.5 times NAV, that doesn't make sense right now either, right? So if it's 4 times NAV, I mean, is it really a short?
Let me see if I can figure out a way that we can actually see it, like compare it. One second.
Google's being weird. It usually lets you compare them. In the meantime, Steve, here is your spreadsheet. We'll bring this up right here. Okay, you got to zoom in for us a little bit. But
So
here's Amazon and Walmart.
let's look at Amazon and Walmart. Amazon's got over $94 billion in cash and short-term investments on the balance sheet, compared to Walmart at $9.3 billion. Amazon's got $85 billion more in cash. They generate $76 billion more in cash from operations. They generate $83 billion more in EBITDA, and they generate $47 billion more in net income. Then, when you look at where the market is placing the multiple, it's disgusting. Amazon's got over 44% growth from the end of this year through 2027. Walmart has 26%, all based on consensus estimates. And Amazon's trading at 23 times 2027 earnings, and Walmart's trading at 30 times. This market is inefficient. It is mispricing companies. There is no way Amazon should have a lower forward PE than Walmart. Not a single way you can slice this up to make sense. If we bring Costco in here, it just looks worse.
Okay, so the conclusion here is the market simply either doesn't believe Amazon's growth story or is afraid of the DOJ stuff that Chris was talking about.
I don't know what it is, but big tech fell out of favor. And for some reason, people got the recession headlines, and companies like Coca-Cola and Walmart got a bid. Yet Coca-Cola is in over 200 countries and territories. They have more tariff risk and recession risk than Amazon. I mean, look, businesses are not getting rid of their AWS solutions. It's not happening.
I would agree. Chris, you have that comparison or no?
Can find
Usually Google lets you do it. I don't know why it's being here. Yeah, but regardless, I think shorting MSTR is tough. Dude, a lot of people tried shorting it beginning of this year, and that has not worked.
I don't know how you short those things.
I mean, you just buy MSTZ. You can
No,
easily.
no, I'm just saying, like in theory.
Oh. Yeah, I agree. It's scary, dude. It's very scary because again, like retail speculation could drive MSTR to like $600-700. It won't make any sense, but absolutely could happen. It absolutely could play out.
It's this NAV multiple. That's what I think Chanos is trying to bank on. So right now the NAV multiple is 1.86. So let me just show you 1 second. So you see this right here, this NAV multiple, so net asset value multiple.
Yeah,
that's what Chanos is looking at, saying, look, you're basically by shorting MSTR, right? What you're essentially doing is, and you're buying Bitcoin with it, which is exactly what MicroStrategy is doing. You're getting almost like it's almost like selling $1 to buy 2. Does that make sense?
Yeah.
At 1.8. Now, here's the thing, which was what you said, which is absolutely true, that the NAV might never get to that 1-to-1 amount, but sometimes the NAVs go absolutely insane. So if you look at MSTR price in November of 2024, it was $473, and Bitcoin at the time was trading for $97. I mean, $97,000. Okay. So the NAV multiplier was about 3.3 times, right? So at the time, if you had shorted MSTR, and you just bought Bitcoin with it, the Bitcoin would have still been at 100, like right now it's at 105. And look at where MSTR is. MSTR is at 399. So basically you collected, what is it? Almost $73 from that NAV compression. Do you see that?
Yeah.
That's the key. But you have to make sure that you're getting that NAV. Basically, you're getting as much NAV as compression as possible. So let's say right now, if MSTR goes up to like NAV 3, then yeah, you could theoretically do that. I think right now, from what I'm seeing in this chart, 1.6, 1.8 is not a, it's like that's what it usually trades at anyway, at least for the last year. Yeah. So it's only if the NAV gets absolutely insane that it would make sense to short MSTR and do that,
Okay, so let's end it off with this conversation, which is actually I have two topics. So one quick one and then my last topic.
And I got one for you guys also.
Okay, so here's the quick one. Chris, should the Fed be cutting rates right now?
Yes, absolutely, 100%. The data justifies it. They should be cutting, and at the same time, all they're really doing is making the situation for the federal government worse, because now they just keep having to issue more and more debt. Most of the treasury issuances are actually bills right now, which means that the average rate on our debt is growing really fast.
It's like we are, if we can't refinance this basically 10 trillion that's due, I think in July, Chris probably coming back, then we've got some issues. Steve and I were talking about it today. Like we can't just say, oh, we'll pay you back later, because then no one's going to trust our debt, right? Then Moody's is going to be right.
They needed to be cutting since February or January. They should have never stopped.
Yeah, and I think this is the biggest concern. So here's a better question then, Chris. What do you think Bessent does? How does Bessent find a way to navigate these bond yields? Because it's not going to be Trump that fixes this, right?
There's about 3 different ways that they could do it without causing a massive amount of inflation. Number one is utilizing the Fed's balance sheet, right? So let me just show 1 second balance sheet. So if you look at the total assets of the Fed, you can see right here that they monetize the debt by basically buying treasuries all the way up until April 20th of 2022, and then they've kind of went into QT, which meant they've been rolling debt off, right? So they slowed the debt roll off, which is good, but there's other mechanisms that they could utilize. So the way that they could do this is by basically let me just add a line, MBS holding. So if you look at this right here, and let me just do, how do I present this and make it easier for everyone to see? Let me just erase the first one. Okay. If you look at this chart right here. Sorry, guys. Give me 1 second.
Hang Seng futures are down. Let me check Nikkei, Japan futures. Those are also down 0.5%. And then stock market futures are still down about 1%. So looks like tomorrow morning, if we don't recover, we're opening up down 1% across the board.
So the Treasury right now is holding about $2 trillion of mortgage-backed securities. Okay. I don't know if this is the right thing. Let me just double check. I don't think this is the right thing. Fred.
Chris, not Chris. Steve, we hear the sirens, by the way.
Yeah, I live in New York. What do you expect?
I will never live in New York because of this, bro. It's ridiculous.
Okay, so this is right here. This is actually what the Fed owns. The Fed owns about before in 2022, they owned about $2.7 trillion worth worth of mortgage-backed securities. Okay, so everyone's asking why they got those 3% mortgages. Well, the federal government came in via the Fed and just bought up all those mortgage-backed securities. So that's why you were able to get a 3% mortgage. Okay, the Fed basically was just buying right and left. Since then, things have been going down. You can see that this orderly wind down, basically they sell a certain portion of it, certain portions of it get repaid via prepayments. When you basically have, let's say, a 3% mortgage or 4 or 5, whatever, that mortgage-backed security, and then you refinance, that money ends up going back to the bondholders, who's the federal government. Well, not federal government. It's actually the Federal Reserve. That gets rolled off. So one of the things that they could use, something called Operation Twist, where there's a couple of things. This is not Operation Twist, actually. What they could do is sell these mortgage-backed securities in the open market and instead buy long-term treasuries. Okay, so like think of the 10, 20, and 30 years. So this way now you're going to be able to flatten the curve down. So longer-term debt, you're going to be able to kind of like bring it back down. And I think this is one of the things that they'll eventually going to do. Now, the reason why this is not going to cause inflation is because you're basically taking one security, selling it, and buying another security.
Right.
Okay.
Right.
So that's not inflationary. So that's one of the good things. The other thing you could do is something called Operation Twist. They did this in 2011, but Operation.
I've never heard of this.
Twist.
Do you guys know what this is? Operation Twist?
Yeah. So this is what Operation Twist looks like. And this was actually mentioned a couple of times.
Wait, does this have to do with the SLRs or no?
No, this is something different. This is something stupid. Hold on.
Operation Twist.
Yeah.
I have a good link on this. You want me to share this one? This is investment.
Yeah, go for it.
All right, so I'll read it and then you can expand on it. Operation Twist is a Federal Reserve monetary policy initiative used in the U.S. to pass lower long-term interest rates to further stimulate the U.S. economy when traditional monetary tools were lacking. The term gets its name from the simultaneous buying of long-term bonds and selling short-term bonds, suggesting a twisting of the yield curve and creating less curvature in the rate term structure.
Yeah.
Huh.
So imagine right now the federal government. I mean, let me just show you. This is what it looks like in a diagram form. And this is one of the ways that you get it without having to cause inflation. So, sorry. Can you see this right here?
Yeah, that's good.
Okay, let me just minimize this. Okay, where basically the Federal Reserve, what they do is they sell a bunch of short-dated treasuries, right? And they get money from the investors, right? They use that money to buy long-dated treasuries, right? And then they would end up buying those long-dated treasuries, pulling yields down. So imagine right now you would take $1 trillion, issue short-term paper, and you could only do this if interest rates were lower, that it would actually make sense. Like, so let's say the Fed right now lowered interest rates in the short term by 200 basis points, right? So now instead of it being 4.25, it was only 2%, right? You could theoretically go out into the market, issue $2 trillion worth of 2% debt, and go out there and buy 30-year fixed debt for 4.5%. Right. And so basically now what you're doing is you're bringing that yield down. That's what's going to happen. Yeah.
Okay. And the third way I would imagine is the SLR stuff.
Yeah. The third way is by making people hold more treasuries. Now there's two ways of doing it. One is the official way that I think it's been spoken about, which is getting the banks to buy it. But then you could also theoretically get investors like the average Joe to buy treasuries as well as part of their portfolios by exempting them from, let's say, federal income taxes. So treasuries right now, if you get interest from treasuries, you don't have to pay state and local taxes, but you do have to pay federal taxes on the gains, right? So let's say right now you have $10 million. Well, one of the things, that you still have to do is you have to pay for that interest to the federal government. But what if the federal government, you didn't have to pay? Yeah. That means that now you could hold all those treasuries and you're basically, you're making it more of an incentive to buy them. And the way that you could do it is by saying, if you buy, like, let's say the 30-year bond, you don't have to pay, any, or the 20-year bond or the 10-year bond, you don't have to pay any federal taxes on it, And boom, now you got a whole bunch of people demanding more. There's another couple of ways. This is the one where it's a little bit like shady, but you could do it. And it's actually being discussed with Japan right now. So basically, there's a report. I'm not going to say if it's actually 100% true or not, but basically what the US could do to like countries like Japan, where in lieu of dropping certain trade, right here, 1 second. So in lieu of dropping some of these tariffs to get them to buy more US treasuries.
But they already own so much of our debt.
Yeah. I think to buy more. Just tell them, just like buy more of our long-term debt.
And
That's an option.
They would do it to just keep A, tariffs low, and B, relations good. That would be the reason.
Theoretically, I mean, they don't want to lose access to the market, to the US market, right? So that's one lever that they could pull. And there's a lot of countries out there right now that have that are in like the Chinese right now. The Chinese have their interest rates are like literally barely nothing because they're in a deflationary debt spiral. So you could theoretically say to them, like, look, if you don't want your GDP to crash, buy more US treasuries. I don't know if the Japanese, I don't know if the Chinese will do it, but
Yeah.
So print Japanese yen to buy US treasury. Pretty much.
It's interesting to explore how we're going to fix this situation because we got a lot of debt coming up and JPAL's not helping. And if JPAL doesn't help, then there's got to be some creative way to navigate this, whether it's with Japan or with SLR or something.
Here's the thing. My theory is they're 100% going to try to get long-term treasury rates down.
Yes.
Okay. There's no option for them not to do that because if their ultimate goal, from what Bessent was saying today, is they want to cut spending, there is nowhere that they're actually going to be able to cut spending without huge changes from a legislative standpoint. And neither party is willing to budge on actual real spending cuts that are going to make a meaningful difference. The only area that basically the administration has is by getting these damn interest rates lower. If they do that, they can cut the debt deficit by a significant amount. But once again, you have to get Jay Powell on board. And by Trump mouthing off, it's not going to help because people are going to say, oh, the Fed is not independent and all this other stuff. So we'll see.
Yeah.
One of the things that I want to clarify. So this guy, Sanjay, he's like, China went from number 3 to number 2 in terms of holders of U.S. debt. The UK, if you look at the debt, let me just pull it up. Macro, micro.
That was a headline on Friday. They went to number 3. The UK's number 2, but it's like a $20 billion difference. It's not like some.
No, this is where you have to look at the data and understand what's actually happening. So if you look at this chart, you would think oh my God, let me just look at China and let's look at UK, Belgium, and all these other countries. It just kind of kill them. From this, you're like, oh my God, looks like the British are buying all of our debt and the Chinese are selling our debt, right?
Yeah.
This is a problem. No, it's just that all these hedge funds, all these guys, they own operations in London. And so all the buying looks like it's happening, in the UK. The UK is not actually buying all of it. Like Belgium. Look at Belgium. Belgium owns what? Almost 400 billion of our debt. You think Belgium has that kind of look at their GDP. No, it's just funds utilizing different places. Luxembourg, look, they own almost 400 billion of our debt.
Dude, Belgium's GDP is 650 billion.
Right. So then how are they buying? Well, it's not. It's just the place where these funds are domiciled is what actually is happening. Look at Ireland. Ireland right now. You think Ireland is buying our debt? They have 320 billion of our debt. No, it's just where the money is being parked right now. And so a lot of the money that's look at the Cayman Islands. There's $450 billion in the Cayman Islands. So
dude, How much unpaid taxes are just sitting in the Cayman Islands, putting our money into U.S. debt? Like, it's ridiculous, bro.
That's what I'm trying to say. That's so a lot of people are like, oh my God, look, the Chinese, they're dumping our debt. Like, no, bro, they're just moving it from place to place, trying to hide it. That's all. Just chill.
All right, Steve, what's your last topic for today?
All right. You two are intelligent, so I have a business question for you.
Also, did you get a new mic?
No?
It's weird. Your voice is fading in. It's a little weird. Maybe just put it closer to you, but kind of, yeah, that's probably better.
Is that better?
That's way better. That's actually way better. All right, go ahead.
Now the mic is closer to me.
Thank you, Steve. I appreciate that.
I'm glad I can make you happy.
Okay, go ahead.
All right. So if I was to tell both of you, I was going to sell you a business for $250,000. Okay. And I gave you two options of financials to look at. Because I'm thinking, all right, let's put this into normal terms. Somebody wants to go buy a laundromat. Somebody wants to go buy a car wash or something. I know it's not 250 grand, but let's just say it is. You got two sets of stuff. I'm going to show you the two sets, and then I would like each of you to tell me which one you would rather spend your $250,000 on. I have growth rates in there and everything. So right now, on 2024, when I give you everything, $137,895 of revenue.
This is Tevis Corp? You comparing
Yes.
against Tevis Corp?
Steve
Okay.
Corp versus Tevis Corp. Okay.
That's right.
All right.
Now, Steve Corp has a lot more growth, okay, because it's not as mature of a company as Tevis Corp. But over the next 10 years, Steve Corp is only going to generate $179,000 in revenue. And at 40% margins on free cash flow, $71,000 free cash flow. Versus Tevis Corp, which for that $250,000 will do $667,000 in revenue and $220,000 in free cash flow. Which one is a better buy?
Well, what are you doing with that free cash flow? Like on a per share basis? Are you buying back shares?
That's for you to decide. I'm just saying, what business would you rather buy based off of these?
Which
For
one?
250 grand.
Which I agree with Melanie. Which one defends Western values? That's the one that
I'd say
Neither
I'd go
defends
with.
Western
I'd say
value.
I'd go with Steve Corp, especially if they could maintain that growth rate of 22%, because the compounding aspect of it's going to be insane going the next 10 years versus the growth rate here at Tevis Corp. So in theory, it looks like, this is where you'd have to tell me a stock price, basically, because then I could actually tell you what it is. It's hard to say each one of these things,
Chris, all I'm saying is over the next 10 years, that's a long time. Let me bump this up, make it a little bit more tight. Let's say I gave you 40%. All right.
Yeah.
Still, your profit is still nowhere near what Tevis Corp is going to do for you.
Yeah, but what are you doing with that free cash flow? That's the real question, no?
I'm just saying, from a business aspect, if you had put your money somewhere for the next 10 years, which one would you rather have?
I'd have free cash flow because I want that free cash flow to keep growing. You went from $1,000 in free cash flow, so you're going to value the company based on that 1,000, and then you're valuing it on 33,000. So that's a 33x return on that free cash flow. So that's the one that I'd go with, because technically I could probably buy more shares of Steve Corp. So you got to tell me like what the price of each share is, and then I could actually put a multiple against it, right? So
You're hurting my brain.
go for it. Go explain.
You're hurting my freaking brain.
Well, the answer is he'd rather buy Steve Corp. That's his answer.
So the answer for 250 grand, you'd rather get 112,000 free cash flow versus 219,000 free cash flow.
Well, no, I'm looking at this 10 years out. I mean, look at that free cash flow growth. That's the real key, right? So I'm thinking like, okay, what is this guy doing with, like, what is this business doing with this free cash flow? The free cash flow from Tevis's business went from $12,000 to $29,000, right? So it literally grew like 3 times, right? Versus Steve Corp, which grew 30 times. So you tell me.
I'm giving
I
you.
agree with Chris. I agree with Christopher Patel.
I'm giving you a very big multiple on 40%, but on the real numbers, those are the real numbers.
That's still almost 25% compounded.
That's literally like you went from one, like I said, free cash flow went from 1 to 16. So like I said, I'd need to know how much I'm paying for Steve Corp.
You're
Like
paying
in terms of like free cash flow.
$250,000 for Steve Corp.
So if it's an equal amount invested, I'm taking Steve Corp. I agree with Chris. I like the free cash flow growth. And I also like that I think Steve Corp defends Western values.
No. So here's where Steve
Chris,
is right.
you know what the companies are, right? Have you figured it out by now?
I could care less. No,
The-
because
the
one of
Steve-
them is definitely like a more seasoned.
Steve Corp is Palantir. Tevis Corp is Salesforce.
Just without the extra 6 zeros on all the numbers.
Chris is buying Palantir, baby.
No, I'm not. No,
I'm
I'm not.
so
We got
mad
Chris
right now.
to buy
No.
Chris.
I'm
this is a-
so mad right
I
now.
am so happy you did this, Steve. Like, I
No.
cannot tell you. I didn't know you were going to do this today. I am so
I'm
happy.
so mad.
We got our
Once
boy
again,
to realize it was
you
Palantir.
can't. I'm telling you, the problem is you can't tell based on what price I'm paying for each company.
Yes, you can, because you're paying $250,000 for $219,000 of free cash.
I mean, if it's
flow,
like, yes, one share of Steve Corp and one
or-
share of Tevis
or
Corp, then yes, of
$73,000
course,
worth of
Tevis.
free cash flow.
But what I'm trying to say is, if I was buying one share of Steve Corp and one share of Tevis Corp, then yes, Tevis Corp is the right way to go, right? But once again, what's happening with that free cash flow?
I really love this. Steve
And
did
especially
not
if you're
Steve did
looking-
not tell me he was doing this today. I just want to make that clear.
I mean, the logical answer, of course, is Tevis Corp, but the growth rate is phenomenally higher on the other side.
The
so.
growth rate is phenomenally higher for Steve Corp. But for
Yeah.
Tevis
So if you
Corp,
go 10 years forward, because you're telling me based on these numbers right here, like, are you telling me, Chris, you're buying this business in 2024 or are you buying this in 2034?
you're buying it right now. I gave you the 2024 numbers and what is projected for 2025 through 2034.
Steve, I think you were trying to prove your business 101 lesson, but it's obvious Chris picked growth like most people are right now.
Yeah, most people are picking fucking growth, which makes no sense because Tevis Corp is still growing. And
No, but hold on. At a 40% CAGR, even if you do 35%, that's a 20x increase in free cash flow. That's not, Tevis Corp is not doing that.
But Tevis Corp is still generating more free cash flow.
But it's not growing at the rate.
It's not growing at the rate, but it's still generating more free cash flow.
Yeah, but it's just a
Like,
question.
in order for
Do you care about the absolute dollars
on,
of free
go back,
cash flow
go
or
back.
the growth? That's the question.
go back, in order for Steve Corp to get to Tevis Corp's free cash flow in 2024, it would be halfway through 2023 until it hits that rate. All I'm saying is paying $250,000 for the first company versus $250,000 for the second company makes 0 sense.
But Steve,
Because-
that's all relative. That's all relative to the time horizon that you're looking at, right? Like if you're looking at,
the only reason I gave it a 10-year time horizon is because that's as far as the consensus estimates go out. I don't want to make up numbers.
yeah,
I can't go out 11 or 12 because we don't have numbers for that.
yeah.
So we're buying Palantir. That's the argument.
I mean, I guess people love the growth. It just, to me, it doesn't make sense. I'd rather have the additional profitability. I mean,
But Steve, this goes right back into what are they doing with that free cash flow? Okay.
well, we know that
You can't-
Salesforce is buying back shares and paying a dividend.
Right.
And Palantir
That's
is
the whole-
diluting shareholders.
That's the point. That's the part that you didn't mix in there to basically make the argument work in your favor. Right? Which is one, the share count is going up, the dilution is going up. The other one, the dilution is going down. I mean, one of the challenges with Palantir is that they're using to basically even do their rule of 40 numbers. They're using adjusted EBITDA when you're supposed to use GAAP net income. If you use GAAP net income, then Palantir doesn't exactly look like a rule of 40 company. Okay, most of their compensation right now is being in share-based comp, right? Whereas if you're paying straight line cash, it's a big difference. I mean, that's why even Buffett says You know, like EBITDA is one of the worst things, especially adjusted EBITDA is one of the worst ways that you can value these businesses.
I hate, and SoFi does it also. I cannot stand when companies report adjusted EBITDA or adjusted free cash flow. Just give us the straight line number.
Yeah, they won't.
So
They
annoying.
make their business look different. But that's the point, that if you literally backed out all the SBC and the dilution, yeah, why didn't you include that portion in this?
Because
I didn't want to give it away of what companies they were.
There you go. There you
That's
go.
why I
That's
put the same price instead of putting 310,000 versus 260,000.
Because I mean, if you think about that, that's why I asked you, what's the share count? If the Steve Corp, the share count is
Yeah,
growing.
no, I'm talking total company.
Yeah.
Just as a total company, it makes more sense to buy Tevis Corp for the 250 grand because you're getting so much more profitability. And at the end of the 10 years, you can pocket the 219 and sell the company for so much more because of how profitable it is.
Yeah,
All
but you're
I'm
not
saying
going to.
is-
But the difference, Steve, is that the multiple that you're going to get on Tevis Corp is going to be much lower than the multiple that you're going to get on Steve Corp, mainly because there's actual growth there. So if you think about it, like if you have a company growing at single digits, what are you going to pay? You're going to pay a 30 PE for that company, like you said with Walmart? No. You're going to say, screw this. This doesn't make sense. Where Amazon, like I'm using your own logic to you. You want to pay. You would want to pay more for Amazon, right? Their PE should be way higher, somewhere around 30, because they're actually growing significantly, whereas Walmart is not growing as much.
Palantir should have a much bigger PE than Salesforce. There is no question about that.
Right, but not to the level that it is right now. But not to the level that it is right now.
Not to the level it is right now.
Right. So that's what I'm saying. In the future,
double, triple, sure, maybe even quadruple, but not 10x.
Palantir should closely be between, let's say, even the most aggressive way, be like on a forward basis, be like 35 PE forward. Okay.
I mean, I would give
and it's not going to get there until 2030.
Yeah. I mean, look, I would say paying 80 times earnings for Palantir right now wouldn't be crazy. And that's a very lucrative multiple, but it's trading at a higher multiple.
Here's the funny thing. What is the PE of Palantir? Like, let's say it's the stock price at a 30 PE. What is the price of Palantir?
At a 30 PE?
Mm-hmm.
On this year?
How much earnings they're going to do this year?
$16. Yeah. Because they only expect to do 58 cents of earnings this year.
That's the thing. That's the challenge. And a 30 PE is a really, really high PE to pass.
Trades at 223 times this year's earnings.
All I know is that Chris picked Palantir. That's all I know.
No, that Chris did pick Palantir.
But
that's without.
And Steve, Business 101 lesson completely backfired. And I love it.
Didn't backfire because
I love it so much.
Taking more profitability makes sense.
Yeah.
All I'm saying is it doesn't make sense to pay right now the same price or a higher price for something that's not going to be generating the same amount of profitability that the company is currently 10 years in the future.
Well, Chris picked Palantir, which is what matters.
No, look, if Palantir drops, I'll buy from Palantir, but it's got to drop pretty significantly. I'm not buying it at this crazy valuation right now. And I think eventually the market will wake up to it. There's definitely going to be times where their growth rates are going to slow down. Right now, their growth rates are accelerating, which is why everyone is so hyped about it. But if Steve is right and growth, starts to decelerate into the 20s again, and especially if their free cash flow starts to go down, primarily from treasuries getting rolled off after a 200 basis cut, then we're likely to see things going the other direction. So
this is we should do this again, Steve. There's two unknown companies. Like, this is actually a good idea.
Let me show you how I'm not going to share that screen. Let me share a different screen. I want everybody to understand that I did not make these numbers up. Seeking Alpha gives you out to 2034. So I used the exact growth rates that you're getting and the exact amounts of revenue estimates there are. Now, granted, it's only two analysts there committing to this, but it's still not my set of numbers. I'm going with exactly what the analyst community is putting on the ratios.
So
Yeah,
December
if you-
34th, they're going to generate $6.68 in earnings.
Yeah, they trade 20 times 2034 earnings. Get the fuck out of here.
You know when Steve curses, it's lit.
It's annoying. It's just it's annoying. That's all.
Steve
one
Corp is
that-
founder led. That's true.
The one that you guys got to watch out for is ASTS.
Oh
reason
God,
why-
here we go.
The reason why I say that is, hold on, Steve.
Oh, real
I
quick,
know
real
they're
quick,
not-
just before you continue, we're not streaming NVIDIA, guys. We're going to close out in like 10 minutes, but for anyone who wants to watch it, I'll put it in the chat. But I'll recap what happened tomorrow morning about open.
The reason why I say that is because the case is still to be proven out. Their monetization strategy, in my opinion, actually works. And the thing is, once they start generating real revenue and they start generating services revenue, they're going to be a free cash flow monster, you know? And they're literally, this reminds me of like buying American Tower in the year 2000. Like I wish I had done it, but you know, I was in high school. I didn't really know that this was going to be a big thing. But think about it this way: how many people there are on the planet, and how many cell phones there are on the planet, and how many MNOs have already signed with ASTS. You know, right now it's an $8 billion market cap company. I mean, just think about, I'm not even looking at this from just market cap, but if they generate so much freaking free cash flow and they just keep buying back shares with it and doing dividends, I mean, this thing could be a growth monster. Like, pull up American Tower. Don't put it up on Robinhood. Just put up American Tower on like Google or something. Okay, and just do max. So when the cell phone first came out, okay, this is like literally like in 2000, right? Like everyone had still their flip phones and everything else. The stock price at the time was about $9, okay? So at the lows after the .com crash, look at that, about a couple of dollars, maybe like $5, whatever, right? Since then, it has gone to be $200. And this is the part that probably should even freak people out even more. Go to the dividends on American Tower.
Let me look that up. Dividend growth, American Tower. I imagine they've consistently grown their dividend.
Yes, absolutely. And just go up. Yeah, look at the payout right there. So scroll down. So if you had bought this company, literally back then in the year 2002, right now you would have gotten paid $6 in dividends. Okay, right now the yield is 3%. But if you bought it for $6, which is what your cost basis would have been, you would have got 100% yield per year in the year 2024. Okay. Now the thing is, it's really hard to figure out like what's going to happen way out into the future.
Chris, how
But
much
this
free
is-
cash flow is ASTS expected to generate?
I have to look it up. There's a lot. There's so many pie in the sky dreams that are out there with how much cash flow these guys are generating, but it's a completely new industry. Okay. So there's no other industry that I think can replicate this. I mean, you know, maybe we have to use Starlink as a proxy. I don't know how much money Starlink is generating, but these guys are basically using these Bluebird satellites. These are, you know, expenses that they're going to incur upfront, but then they're going to be charging this huge tail of services revenue, and services is going to be super high margin, you know?
Yeah, it's definitely one to look at. I mean, they had earnings. It was decent. The stock's obviously aggressively getting a multiple right now based on, Chris, your point, like the expected returns.
The question is, where is the moat with these guys? And I think that's the biggest thing. Their moat is their MNO partnerships, with their multinational partnerships with Vodafone, Verizon, with AT&T. And the thing is, they're able to use that spectrum that these guys own. So all they're going to be doing is literally picking up pennies from the total services revenue that Verizon and AT&T and all these guys are going to be getting. But if you add up all those pennies, they end up being a shit ton of money.
Right.
But like I said, you have to look way, way out into the future. Like if you told someone in the year 2002, hey, I have an idea. Let's buy towers. Let's buy cell phone towers. That's a growth play. What would you have said?
I was 5 years old. I don't know what I would have said, to be honest.
Exactly. You would have had to have the vision, like, let me look out way into the future. So all you guys are talking about, oh, all these robots. Well, what do you think all these robots are going to be connected via? Like if you have
GPUs.
robots walking around between, let's say streets and stuff, they're not going to be connected to Wi-Fi. They're going to be connected via cell phones, via satellites, via all this other
Starlink.
stuff.
That's fair.
Starlink, right? You've got all these shipments going from one place to another. Every one of them has a transponder now being monitored by a satellite. I don't know.
But we should get Chris's take before we go on if something's just a bank or not.
Oh wait, hold on. Okay,
So
you still want to do this? Christine is so mad about some. Hold on, real quick. I want to do this one. I still have one last topic. Okay, can we all admit last week was one of the best weeks ever in the Trump administration? I know it's only been 100 days, but like we can all agree last week was freaking amazing in terms of the commitments potentially he's getting in the United States.
We need those countries to come through on their commitments.
Okay,
Yeah.
let's say they even do half of what they committed. That's like 100. That's literally.
It'll be great.
Reid Hoffman came with Trump?
I was shocked when I saw that.
Everybody was there. Everybody. And I was telling
Reid
Steve,
Hoffman?
I was telling Steve today, look, people know Microsoft, Nvidia, Amazon, Tesla. Like you go to the average person in America, they know those brands. The average person in America has zero clue what Palantir is. But Alex Karp got an invite. And so I just feel like there was a lot of tech companies that are going to be making a decent chunk of cash if the UAE and Qatar actually makes these investments. And I think it was a big win for Trump. Do we agree that it made a big win for Trump?
They got to come through with what they're promising, but it's certainly bullish.
Chris, is it a win or it's a whatever?
I mean, it's a win if the commitments actually come through. I mean, I hope a lot of this stuff isn't just smoke and mirrors, basically just being, presenting this with to the Trump administration to be in their good graces. I think the bigger thing is, what did Trump ask for? I think it wasn't the money. I think Trump, they asked that the U.S. control probably their output of oil and nat gas. Because that's the other thing too. Like,
I think there's definitely an oil situation here. I think based on some of the research I did this weekend around Saudi Arabia, the prince really, he has literally been on live keynotes and interviews saying that the Saudi has an oil addiction. Like he's not happy that they make the majority of their money from oil. So he wants to diversify aggressively. And the only way to diversify is to be able to build out an ecosystem of privatizing the economy, which just requires more AI investments. And then number three, the Saudis don't like Iran. And that's where them and the U.S. are very well aligned. I think there's a world in which maybe there's more of a strategic geopolitical alliance there to control Iran from getting a nuclear weapon.
No, that makes absolute sense. I think also the Saudis actually heavily invested in some natural gas infrastructure here in the U.S. as well.
Yes.
So that's another thing to look at. So, the Saudis are very good with managing their sovereign wealth fund to make sure that they are transitioning their economy in the future to not be, because everyone knows, like, give it like another 10, 15 years and oil is not going to be the most important commodity on the planet. It's going to be other things. And so knowledge, I think, is going to be probably the biggest thing. So when it comes down to it, the Saudis want to be a part of that future,
Dude, I think it was a big win, dude. Like a really big win. I know we haven't got the investments, but 2.4 trillion has been committed. Let's see how much we get. But one of the reasons I think they're going to come through on this is because, again, they need to. The Saudis are going to run out of oil in the next 30 years. They need to develop.
By the way, just remember, it's 2.4 over like a long period of years. It's not like, it's not just going to be like, oh my God, here you go. Here's $2.4 trillion. Like, no, it's like
as investors, bro.
Yeah.
Oracle, Salesforce, Google, Amazon, obviously Nvidia, all the semiconductor derivatives of Nvidia, the SMCIs, the Microns, like, I don't see how this is not, and I think a lot of shorts got blindsided last week because the media messed up. They did not leak that Karp, Elon, Jensen, Lisa Su, Jassy, Larry Fink, Sam Altman, all these guys just happened to be in the Kingdom of Saudi. Like, I had no idea that they were there.
You gotta be proud. You gotta be proud of America's CEOs, bro. They are like some freaking top-notch killers who are just out there. And then you've got the Trump administration bringing all of them along. How could you not be bullish America? Like, who can Xi Jinping bring out in the middle of Saudi Arabia and say, look, this is the future?
No one. Absolutely no one. No
You
one.
know, they had a couple of guys like Jack Ma, but they got hammered. So
yeah, and again,
I mean,
if you were short last week and you didn't know that every American CEO was trying to confirm tens of billions of dollars of investments from the Saudis, the Qataris, etc., you got hit badly last week.
Yeah. Pony Ma's good too, by the way. Someone said a 10-cent CEO, Pony Ma, he's good too. Yeah.
And can we end on the other thing that's making my blood boil?
Yes. Okay. If you guys don't want to hear a bank discussion,
because I just built something that is just disgusting.
If you don't want to hear that, that's the end of the future show. I'll be live tomorrow on the Market Open, and we'll keep getting into it. But if you do want to stay for a discussion about banks, then feel free to stay. All right, Steve, what do we got?
I mean, this is crazy. Like, JP Morgan is not worried about SoFi. Got news for everybody. Like, that argument that people were making, SoFi's not taking away JP Morgan customers. JP Morgan grew 14% revenue year over year last year, and their net income grew by 18%. Their net income grew by more than triple the revenue SoFi does. Now, what I've been arguing is for SoFi to justify this multiple, because banks trade off of book value in most cases. There's a reason they have a low PE, and I'm glad Chris is on, because Chris understands banks very well. When you buy a bank, you're buying a book of assets. Their traditional business is lending. And you look at LDR ratio to make sure you have more deposits and loans on the balance sheet. And because you're buying a book of assets that generates net interest income, they typically trade as a premium or discount to their book value, because that is what their assets are worth. JP Morgan generating $58 billion in net income and growing their net income at 18% is trading at 124% premium to its book value on its share price. I get growth. I get it. Growth. But once again, SoFi is getting a bigger premium on book value than JP Morgan. And it doesn't make sense to me. I have a lot of SoFi shares.
The reason why is because SoFi touts itself as a tech company too. So
and that's why
giving it that tech multiple. Yeah.
SoFi is not a tech company. To me, you can't be a tech company when 13% of your revenue is coming from tech and less than 10% of your contribution profit is coming from tech. The lion's share of their business is coming from lending and financial services.
But here's the thing. What is the value? So this is me just playing devil's advocate, okay? Because I do believe that SoFi is just a bank. The footprint on SoFi is a lot more, dialed back than JP Morgan. JP Morgan still has costs that are up there. So what are the operating profits of SoFi look like versus JP Morgan?
When you say operating profit,
operating margins.
You want me to do operating income versus? That's what you want.
No, just do the margins. Just look at the margins. Give me operating margin on SoFi and give me operating margin on JP Morgan. Yeah. Because if SoFi has a higher operating margin, that means that it technically is like more of like a tech company, right? JP Morgan operating income, operating margins.
I got you. I'm building it right now. Give me one sec.
The kind of core point of this is, I think Steve's upset from the SoFi Weekly community that says he doesn't understand how to value a bank.
No, that I don't understand that SoFi is a tech company and that it should trade at a higher premium than these companies. And people think SoFi is undervalued here. It's crazy to me.
I mean, to me, it's just a bank. I would give it like a 10 PE, like everything else. I mean, unless they're growing their their bottom line a significant amount compared to everyone else.
And here's what people should remember. It does not benefit me at all to say that SoFi is just a bank. Like, I'm being very objective here. If I wanted to talk my book or try to blow this up, I'd be saying that this is undervalued. Where this is a tech company, people don't know what they're talking.
And you own a lot of shares too.
I own a lot of shares.
You want my honest opinion on a great tech company that parades a little bit like a bank? It's freaking Robinhood. All right. that is a tech company in the fintech space that's astronomical when it comes to its growth, and its margins are improving, and it's buying back shares. Chris Camillo called it 100% right when it came to Robinhood. These guys are going to be monsters. Okay, so even if their market cap grows by double, bro, the amount of shares they're going to buy back with all that cash flow, this thing is going to go way higher.
What company at 50 billion is growing 50% and then buying back 1.5 billion of their, like, that's like you don't get that mix.
And their PE is not that bad. It's like in the 30s, which technically is a little high, but dude, their growth rate is phenomenal, and they've still got so much opportunity for additional markets.
Yeah.
You know, Canada, the UK, Europe, all these things. So
Singapore, they're going at the end of the year. Yeah.
So there's your margins, Chris.
Yeah. Okay, so JP Morgan. Oh, there you go. So
here's your margins. That's SoFi's operating income for 2024 and their revenue.
Are SoFi's margins at least improving dramatically?
Yeah, they're improving, but once again, to be a tech company, you would want to see more. I mean, I haven't showed you it, so I should show it to you. But it's amazing that people are like arguing that this is a tech company.
The one thing the one thing I didn't like, I think I was listening to a little bit of your debate with Tanner, and you know, you said, hey, why don't they show us the active user base? Because that's what a tech company does. And Tanner was like, oh, this is not Facebook. Facebook needs you to be active to like watch ads. SoFi doesn't need you to be active. I think there's a double bind there. And I've been saying that for a couple of weeks. Either paying off your loan on some auto pay or putting in a monthly deposit via direct deposit from your W-2 into SoFi's banking platform is activity, quote unquote. And you don't need to literally be active, AKA log into the platform, but that's a bank. If we count an active member as paying off your loan and getting your direct deposit, that is a bank. A tech company, to me, is users, whether it's Netflix, Facebook, Robinhood, that are engaged on the platform. Their time and their attention, which is the most important thing in the world, is spent on that platform. And they are doing things that are producing revenue, being upsold, new products, yada, yada. And that's what creates the function of a technology company that has fixed costs and then massive network effects to create leverage. If we don't need to care about that for SoFi, aka we don't need their monthly active users, we just need 11 million members, this is a bank.
The challenge is this. If the operating margins don't go above that 10% threshold, then it's a bank. Okay. And that's it.
It better be higher than that. But Chris, look at this.
Yeah.
So this is quarter by quarter. Okay. So this block here is broken out by the segments that SoFi reports on. They report on three segments: lending, technology, and financial services for their net revenue. In Q1 2025, their technology platform generated the most revenue it's ever generated. And it was still 12.63% of their entire revenue. Now,
yeah, it's definitely not a tech company.
When you go to contribution profit, same three things. SoFi's technology contribution profit, just shy of $31 million off of $418 million for the quarter, 7.39%. So here's my thing. I'm not disputing how SoFi makes its money, that it has tech. What I'm saying is how SoFi is labeling its segments. And they clearly have a technology segment. For them to get a technology multiple, they need to be generating at least a third of their revenue and a third of their contribution profit from the technology segment. Otherwise, it's really hard to get behind the idea that it's a technology company.
I don't think it's I mean, whatever. If people want to think of it as a tech company, growth company, whatever, they can. But yeah, I think the user numbers are, Amit said it's absolutely right. I have SoFi. I don't use it. I haven't used it in like so long.
They need to show active users, because people like me who bought a few shares of SoFi in a SoFi account on principle and haven't logged in years and don't use it, they're not generating anything off of me. I'm a dead user. How many dead users are there?
But this is why even Robinhood reports they have 26 million accounts, but only 14 million are MAUs. Now that's a big drop off, but they don't hide that data. They say, yeah, 10 million people don't use our shit every month. And
All right,
Everyone
so-
wakes up. Everyone wakes up. The first thing they do is go to that stupid. Bro, please tell Vlad to go back to using green again instead of that stupid throw up orange / green, whatever that color is. But yeah, dude, the first thing everyone does is look at their Robinhood. Everyone that I know who has Robinhood is like, okay, in the morning time, let me see what my Robinhood looks like. You know.
So somebody asked, where's the comment? What does it matter what SoFi, who cares what SoFi is categorized as? So the reason that I'm bringing it up is because on the fireside chat, not this one, but a previous one, Noto said that they want SoFi to become a top 15 technology company in the US.
let me repeat that because your mic faded out. Noto said they want to be a top 15 tech company by market cap.
So if you want to be a top 15 market cap tech company, you're talking about being as big or bigger than companies like Adobe. So you better be generating a lot of revenue and profit from your technology segment. But I got news for everybody. Lending is not technology. And anybody who's going to try to debate me on this, that, oh, you don't understand how SoFi utilizes tech for underwriting or for its loan platform, what do you think every other business development corporation, every other bank does? They do the same thing. They're all utilizing technology. Look at how many engineers Citigroup has on staff. They're all doing the same shit.
They're all using AI to underwrite, all of them.
God, I hope Robinhood goes back to freaking 30 again. I'm sorry, if you lose a little bit of money, but I want to get back into this thing. Like I missed it, like an idiot. But dude, I'm gonna load the hell up on Robinhood. I'm actually thinking about turning a Robinhood DCA. Believe it or not,
Dude, you should.
I don't think that's a bad idea at this point.
Yeah,
this thing's going higher and it'll be volatile. But like in 10 years, do we not think Robinhood's going to be way bigger?
no, dude, the amount of money that's flowing in from older people transitioning to these younger people who are all indoctrinated into the Robinhood ecosystem, dude. And not to mention their credit card
banking. Yeah, when their credit card only has 200,000 users, when they come out with banking in the fall and they show their deposit numbers, I think it's going to be insane.
How about this? How about this one? Vlad actually gave you a roadmap of what they're going to do. And keep in mind, I'm not a Robinhood shareholder. Okay. This is completely objective. Does not benefit me one bit by saying this. Noto won't even tell you what they're looking to do. Yet Vlad comes out and says business banking, 401ks, this, that, blah, blah, blah. He gives you the roadmap of where they want to be. Noto won't tell you anything.
I'll give you a better one. Vlad actually talks to the people that care about his company.
That too.
I mean, can we stop acting like it is not insane that SoFi has a bigger retail? You do a video on Robinhood, you might get 500 views on YouTube. You do a video.
SoFi's communication sucks, and here's why it sucks.
Hold on, real quick. You can get 10 to 20,000 views on SoFi, and that is not a function of the YouTube algorithm. That's a function of demand in the retail community for that content. That doesn't exist for Robinhood. Robinhood videos, no one cares about them. Noto has that much of a cult following, and he won't talk to his biggest supporters. I don't understand it. I just don't get it.
It doesn't matter. The point is, Vlad is listening. He's a young guy. The company is a founder-led company. It's buying back shares. It's growing. It's got a platform that's addictive. People are all in it. They're innovating every day, adding more and more new things. The growth is not stopping anytime soon. At least I don't see it happening. They've got all sorts of international expansion plans in the wings. How could you not buy into a company like that?
So how about
once again? I feel like I still feel like I missed it when Amit mentioned it to me. Like when you were doing your.
I want to pull up the text message. I remember I sent you a text. It was at $10. I was like, dude, do you think you can get to 20? And you were like, I don't know, man. That's a double. And you were rightfully skeptical, but.
So Chris, how about this?
Mm-hmm.
Everybody knows that Robinhood is giving you a 2 or 3% match on money you move over, depending on how much money you move over. Everybody knows that. So this is the pushback I get from the SoFi community. SoFi gives you 3%. Yeah, who the fuck knows that? Nobody knows that.
Amit, can you highlight this one comment? Hood changed my life with how easy they have made investing. That right there is the essence of what Robinhood is trying to achieve. Making investing easy. Okay. I know that sounds like, oh, it's like, no, people just want to basically look at it, say, okay, I want to buy it and done. That's what most investors do. They don't do the BS that me and you guys, oh, let me look at the PE. Let me look at, like if it's RSI is 30 or 20 or 60, they just want to have a great user experience. And that's what's happening. And people have made good money. It's let a lot of people into the market that wouldn't have used it otherwise. Like my wife right now, she's no jack crap about investing, but she knows how to look on Robinhood and sell shit and buy shit if she wants to,
Yeah. Look, SoFi is not a tech company. It is a bank. It's a financial institution. Its primary businesses are lending and financial services. There's a reason why they're not getting everybody thinks that SoFi should be worth $20, $25, $30. Trust me, I would love to see that share price. I would sell tomorrow. Okay?
Yeah.
I would love to see that share price.
Well,
There's a reason they're not getting that multiple.
Dude, the big question is what changes the narrative? Because Robinhood had a disgusting narrative with the GameStop stuff, but they changed it. What changes the SoFi narrative right now is my question.
I don't know.
Dude, that narrative had the stock at single digits for 3 years. That's how bad the GameStop shit was.
I don't know.
Amit, do you use your Robinhood Gold card?
Yeah, every day, dude. That's the only thing I use.
Hey, why don't you open one of those mystery boxes? I opened a mystery box and I got 2,500 points and I got a Robinhood bottle from it.
Wow. I just take the cash back, but I should do that.
You just take the cash. There's a mystery box feature. Like, let me see if I have.
You have to use your points for the mystery box.
So, Amit, they were trying to tell me that SoFi is taking market share away from everybody. I got news for everyone. If the big banks were worried about SoFi, they would buy SoFi. They would just go acquire them. The big banks are not worried about SoFi.
I don't get how anyone could possibly think JP freaking Morgan gives two you-know-whats about SoFi. Like, if the narrative is the big bank,
nor is Bank of America or Citigroup.
By the way, as a Hood bull, I will say I don't think Schwab cares that much about Hood. Like, I know Hood's taking a little bit more market share, but Schwab has 10 trillion in assets. Like, they'll be okay.
Yeah, there's a difference. Schwab has all the mutual funds, ETFs. They have their 401k stuff. Huge business.
Yeah, that's not going anywhere. So they might not grow as much as Hood, but they're not literally worried that Robin is going to steal their lunch. But in the same vein, why is Bank of America worried about SoFi?
They're not.
In what world?
They're not. They're beating earnings.
Yeah. So if the bull case is taking away market share from legacy banks, I don't see that happening at all.
So this is what's in the mystery boxes: 10,000 points, 5% off for the next 24 hours, 7,500 points, 10% off on groceries, 5,000 points, 5% off on your next restaurant purchase, 2,500 points, 4% for the next 24 hours, 5% on DoorDash. 1.5.
They've gamified it, bro. They've gamified this.
I mean, why don't you open it? Why don't you open one? How many points you got?
I only have 300 points. I need to spend $70 and then I'll get it.
Yeah. I have 779, so I have to spend a little bit more money and then I'll do it.
Yeah, I'll probably get there by the end of the week. But dude, this is fun. This is fun.
Yeah. Vlad, send me some points, bro. Send me some points. I'll open a couple of mystery boxes on air. That's what we should do. See?
That would be fun.
Yeah. Do it next time on your morning stream. Open one up. See?
Yeah, I'll do it. All right. So, Steve, you got that off. I know you wanted to address that. I still think SoFi could hit $20 by the end of the year, though. I still think it's possible. I think we might need some rate cuts to get there.
You need rate cuts and you need their loan originations to freaking explode.
So that's one of the bull cases for SoFi, which is Linda McMahon has really gone hard on what is that thing called? On getting student loan repayments, right? So you could theoretically have people, going to SoFi. Now, I don't know under which circumstances people would opt out of a federal student loan and instead get a SoFi loan, because at least with federal,
make sense from an interest rate perspective.
Yeah, that's the thing. Like, I don't know what the new student loan origination fees look like. I mean, rates look like, because I'm not a student, but that's one of those things. If SoFi could deliver it at a cheaper price, then that's something. But once again, I don't I don't think that the student. Let me look it up. How much is a student loan interest currently? People don't even look. Holy shit! Look at this. Sorry,
It's
I
like
cursed.
7 or no, it has to be more than 7, right?
Okay, so it's federal direct subsidized loans are 6.5.
Right, exactly.
Federal direct unsubsidized is 8. And federal direct plus loans, which is for parents and graduate professionals, 9%. Jesus. Private student loans can range between 3.5 and 17. So I wonder how much student loan rates are for SoFi. Well, they're going to say view your rate.
Well, the thing is,
Probably.
again, with the rate cuts, they can refinance aggressively, right? Which is really good.
Yeah.
But look, I agree. And the other thing is, everyone's talking about these tech deals that Noto's talking about. Like, Noto said we might get them, and then he said if we do, it'll show up in 2026 Q1. That means for the next year, or at least the next 6 months, there's no increased tech growth. Or the next 3 quarters, Q2 to Q4. So the market can't price that in as meaningful. And then second of all, I agree with you, Steve. Like, why did he not say that on the earnings call?
It makes no sense. Once again, a communication error. They should hire me to be their freaking publicist and write Noto's speeches for him at this point. You don't say that on a fireside chat that gets 50 viewers when SoFi earnings is discussed on Bloomberg, CNBC, and you have multiple channels streaming it live, such as yours and Tanner's.
I don't get it.
Missed opportunity after missed opportunity after
But
missed
it's not even missed opportunity. It's like, it's almost like, are they stupid? Like, what's
Yes. They're
like
freaking stupid.
how could you not mention there are 10 tech deals in the pipeline on the earnings call?
Whoever wrote that needs to re-examine the speech 5 times before they put it out there. I'll sign an NDA. Show it to me. I'll let you know what I think because I'm a tough critic. I mean, it's crazy. The fact that you say that at a JP Morgan fireside chat with like 50 viewers versus SoFi earnings is nuts. It's a critical piece of information that shareholders would be interested in, analysts would be interested in, and people are making predictions, they're making YouTube videos, they're writing articles about SoFi after earnings, and that was not in the earnings anywhere. It's crazy.
Yeah, it's weird, dude. It was really weird. I don't get it. I mean, you got Karp and Vlad doing like press conference type of earnings calls, and then Noto is not mentioning the only thing that matters. No one cares about anything else other than the tech platform, and that's the one thing you don't mention. Like, I don't get it. I really don't.
How about do a shareholder day? I don't care if you do it privately and just stream it on YouTube. How about show us the roadmap? Because guess what? If you're as good as you think you are and you're not worried about the competition, you can give them the playbook and you're going to be able to execute better than them, so it doesn't matter. I mean, Vlad told you what he's going to do.
Yeah, and Vlad doesn't care if anyone tries to compete with them because as a tech company, you know that
Vlad's not reinventing the book. He's only going to do what everybody else has already done. It's nothing new.
Dude, my breaking point was when Noto said in the Liz Young podcast, I don't want to tell you guys our goals because I'm afraid someone will copy us.
Yeah.
Noto, that's when I realized I don't care what happens to the stock anymore. I don't think I can invest in this guy.
Noto's copying everybody else. They're not copying him. What are you going to do? Business loans? That's already a thing. What are you going to do? 401k administration? What are you going to do? 401k plans? Everybody's already doing that.
Yeah, it doesn't make sense, dude. It really doesn't make sense.
Guys, so this is something to watch out for. Yield curve. The Japanese, they kind of gave up on yield curve control.
Hold on. I found out this weekend that Japan has a 40-year bond. I did not know that.
Yeah. The 40-year bond's trading at 3% now. It's insane if you think about it. Like,
is that? But like, what are the implications of that? Like,
means that the Bank of Japan is not buying as much of their long-term treasuries. I wonder when they're going to go back to YCC because I think I have to look up the implications of this on the carry trade on this. I doubt it they're going to do it long-term like that. So I don't know. I have to look it up how this could in fact impact things.
All right, we will end it there. Thank you, everybody, for joining. I'm sure you'll hear from Steve and Chris a lot during the week. We have the NVIDIA Taiwan keynote going on right now. We'll recap it in the morning tomorrow. We got another week. We got another week of investing.
I would say, what do you guys think for the rest of this week?
I think we will see a pullback, and I think it will be bought. That's like my gut take on how this is going to play out.
Oh my God. Amit, can you play this? Oh my God.
Steve, what Instagram reel?
Do you? I just want to know if you know what this is from. They've been making all these. Look at your phone.
Oh, this is the AI stuff. Yes, there's a lot of this.
Yeah, this is getting a little weird.
What, sir? I'm asking the fucking questions here, Private. Do you understand? Sir, yes, sir. Well,
Is this from a movie?
Yeah, it's from Full Metal Jacket.
Okay, YouTube's gonna ban it if I play it. But what's Full? I've never seen Full Metal Jacket. What is this? 1987. Who's Matthew Modine?
What the hell?
Who's Matthew Modine? Who's R.L. Ermy?
Amit, stop.
It's so
What?
sad. I don't know who that
Who are
is.
these freaking people?
Bro, I used to watch Mail Call religiously, man. I used RL. Rest in peace. Rest in peace.
I don't. You guys know what I watched this weekend? So I saw Terminator. Told Steve I didn't really love it, but I saw Terminator. Second movie I saw. Oh, Steve, I don't think I told you this.
You watched Days of Thunder?
No, I finished the trilogy.
What trilogy?
High School Musical 3. I watched High School Musical. You know, it was actually kind of weird. My sister came downstairs while I was watching it, and she started laughing at me for watching it. So I did have to deal with that level of embarrassment. But I wanted to finish it.
You're going to be single a long time.
Yeah, I think that you need intervention. I really do. This is not okay. You're watching High School Musical. You're going and swinging on swings in a park. Don't get it.
I wanted to finish the trilogy in 2008. The economic structure of the United States was collapsing, but they somehow made High School Musical 3. And it's been 16 years. I haven't watched it. So I decided, you know what?
In all fairness, I did tell you to watch Casino Royale, not Terminator. You picked Terminator because of robots.
Yeah, I didn't really enjoy Terminator as much. People are saying T2 is the one to watch.
T2 is incredible.
Mm-hmm.
Incredible, but you wouldn't understand it if you didn't watch T1.
Yeah, I didn't really enjoy the movie. It was a good movie. I just didn't like. I wouldn't watch it again.
So Chris, I'm gonna rattle off some stuff. Amit has never seen the following movies: Top Gun, Days of Thunder, Lethal Weapon, Planes, Trades, and Automobiles, Midnight Run, Old School, Wedding Crashers. I mean, I can just keep going and going and going. It is incredible. It's incredible. No Bond movies, no Bourne movies, no nothing.
Also,
no Russell Crowe movies.
Did you see
Gladiator? Did you watch Gladiator?
Gladiator? He never saw Gone 60 Seconds. He never saw Braveheart.
Jesus, man.
Well, whenever I watch these movies, I had to deal with the comments of my TV. For some reason, everyone's so upset.
Yeah, what is wrong with you? Why are you using like
TV? Like,
what brand is that? Is that like some kind of Chinese like knockoff brand?
It's a Hulu
what is that?
TV. No, it's not Hulu. Not Roblox. What's the thing called? Roku. It's a Roku.
So the problem is
you need a bigger TV, man.
Chris, he has the freaking screen protector still on, and it's trapping heat.
Yeah, why don't you take that sticker off? Like, what are you trying to return it after you're done watching the movie?
Leaving it up to troll people.
No, I'm not. Like, the sticker's been on for 5 years. I don't know why it's a big deal. I don't know why I have to get up there and take it off. Like, it's just a freaking sticker.
It's trapping heat. It's going to ruin the screen.
Well, the screen's been good for 5 years. So physics would say.
Have you ever seen John Wick?
I know John Wick. I know the concept of John. No, I've not seen it. But
you see Point Break?
No.
Chris, he's never seen Point Break.
What's Point Break?
You're breaking my heart is what you're doing.
It was Patrick Swayze.
You did not just say that.
Did you actually watch the Did you actually watch the Lord of the Rings trilogy?
Oh,
No, and his favorite company's Palantir, and he didn't. No.
dude, it's a long freaking trilogy. Like I don't like. it's
Did you ever see Roadhouse?
No,
Not the new one, the old one.
Old one.
I know who Keanu Reeves is, but I don't know who Patrick Swayze is.
Dude, Point Break is one of the most iconic classic movies.
Okay, I'll watch it then. I'm being good. I'm watching the Terminator. I will keep doing the movie.
I mean, you gotta watch Lethal Weapon at some point. Lethal Weapon is so incredible. And it's so hard because it's one of the movies where two could actually be better than one, but one was so good that it may be a tie.
You should watch Bicentennial Man with Robin Williams. That's going to be interesting. I know.
Okay.
What's the other one with Jude Law with the robot, the boy? Remember that one where the aliens at the end discover the robot? I forgot it was that kid. Someone here knows what I'm talking about.
I definitely
Not
do.
Iron Robot.
Never.
It's Jude Law. Jude Law's in it, and basically Jude Law is a robot, and Jude Law ends up taking this one kid who thinks he's a real boy. God,
Chris, you've seen like St. Elmo's Fire and all that stuff, right?
yeah.
Mitt's never seen any of that stuff.
I have a lot to look forward to.
I don't get it.
No Country for Old Men. That's a really good movie. AI. That's what it was called. It's called AI. That's right. AI.
I've seen Iron Man. I haven't seen all the Marvel movies, but I've seen Iron Man.
Yeah. Bloodsport's incredible.
Oh, dude, I watch Bloodsport like every
month ago
maybe
for
like
me.
every other like year. Sometimes just goes by, and I'll just be like, hey, let me watch Bloodsport.
Kumatai.
Yeah.
Frank Duck's story. Dude, Bloodsport is so good. That and
Rick
Kickboxer are
Moore.
his best movies.
Yeah. Brick no hit back.
It
And
didn't-
I remember Chong Li, and this dude is just out there like cracking people's skulls.
Chris, what are your top 5 Seagal movies?
Dude, I don't have too many. I'm not a big Seagal fan. I think there's one with DMX. I forget. Damn,
Yeah,
I
that
don't remember
one.
a lot.
I did watch Dora the Explorer when I was younger.
Oh my God.
I ran
All right,
into
guys.
Chong Li at 99 Ranch.
Dude.
I did see Karate Kid. I saw Karate Kid. Karate Kid's good. I saw that.
Yeah.
Dude.
I'm a Karate Kid fan. I have seen Step Brothers. I have not finished Godfather yet. I've seen Pulp Fiction. I'm not a big fan of it, but I've seen it.
Yeah.
But I need to.
You've never seen The Usual Suspects, have you?
Universal Soldier. That was another really good one.
Dolph Lundgren
Universal.
and Van Damme.
I think you
Yep.
need to try High School Musical, Steve.
Oh man, have you seen The Princess Bride?
With the Anne
All
Hathaway.
right, I'm out of here, guys. I'll see you later.
See you, Chris. Princess Bride? I feel like I've heard of this one. Princess Bride. 1987? No, I've never seen this thing. I've heard of it, though, but I haven't seen it. All right. That's it. Thank you, everybody, for being here. We'll be back for the market open tomorrow. Futures down about 1%. We will be live tomorrow morning and analyzing how it plays out. Steve will probably join us later throughout the week.
Go watch Casino Royale tonight.
I'm going to sleep tonight. I want to wake up early. I want to start Monday fresh. So I'm going to
You're in your 20s.
Okay. First of all, I'm in my late 20s. All right. Second of all, I want to wake up early. I need to get the week started. So, all right. Thank you, everybody. Appreciate it. See you guys on the market open. Bye, everyone.